问题提一以上这问题。
countries. Finally, climate change remains the most existential threat that humanity is facing. It is fair to say that the energy transition risks going off track in the immediate term, as countries delay decommissioning polluting energy sources and even reactivating old coal plants to meet short. I see a silver lining on two fronts. Firstly, the current drive towards energy resilience and self-sufficiency will boost investments in renewables in the mid to long term, in Europe as well as elsewhere. This is also an opportunity for the financial sector, which has a key role to play in mobilizing the trillions of investments needed to achieve net zero. Secondly, the current crisis is an opportunity to reconsider our economic models, especially when it comes to our energy consumption. Faced with today's crisis, energy savings and also energy efficiency have taken on a new urgency. It is not merely enough to find new sources of energy. We collectively also need to consume less energy. The lion's share of global emissions on a per capita basis comes from the US, China, and the EU. This is another stark reminder that despite geopolitical tensions, the world's main economic blocs need to continue to cooperate to address the global climate crisis. Without such multilateral efforts, we cannot combat climate change nor achieve net zero. Ladies and gentlemen, this is a collective effort. The same is true for related issues ranging from protecting biodiversity and marine life to ending hunger and poverty. In order to address the key issues of our time, achieving sustainable growth across the global economy, de-escalating and ending the war in Ukraine, and combating climate change, we need to work together. I thank you for your attention.
So thank you, Ms. Backus. Indeed, collective issues require our collective response. And talk about China, our own country. I understand Dr. Giorno just came back from Beijing, accompanying President Bongbong Marcos on a very successful visit. So I think he is very timely for him to share with us his thoughts and insights in terms of how countries can work together. So may I now invite Dr. Giorno to share with us.
Okay. Good morning, everyone. Entering 2023, the world economy faces multiple challenges, from the COVID-19 pandemic to the global supply chain crisis, from persistently high prices owing to higher energy and other commodity prices to the rapid monetary tightening in the US, Europe, and practically all economies, and from worsening poverty to threatening climate disaster. Given this bleak picture, it is easy to despair, to give up. But that's not what responsible policymakers are supposed to do. They are expected to work incessantly toward finding solutions and building on what the leaders before them did. I have seen many crises in my lifetime. The debt crisis in the 80s, the Asian financial crisis, the global financial crisis, the pandemic, and now the geopolitical crisis brought about by Russia's invasion of Ukraine and its aftermath. I've seen when the Philippine economy shrunk by 7% for 2 consecutive years in the mid-80s, when our gross international reserves was down to 2 months, rather 2 weeks' worth of imports, when the debt-to-GDP ratio was more than 100%, when the peso depreciated precipitously as a result of the Asian financial crisis. The bank's non-performing loan ratios were high and unsustainable. But we did recover. From one administration to the next one, structural reforms were introduced. As a result, the Philippine economy steadily grew at an average rate of about 6%. Before the pandemic, our debt-to-GDP ratio was less than 40%. The fiscal deficit was around 3% of GDP. The banks were sound and well capitalized. All these reforms made the Philippine economy resilient to crisis. At the height of the pandemic, the Philippine economy shrunk by more than 9%. But we didn't despair, nor did we sit idly by. We passed laws that opened the economy. We amended the Foreign Investments Act, the Retail Trade Liberalization Act, and the Public Service Act to further relax foreign investment restrictions. The Public Service Act amendments allow 100% foreign ownership of public services such as telecommunications, airports, railways, shipping, and expressways. Not surprisingly, the Philippine economy rebounded by 5.7% in 2021. We expect the economy to have grown by at least 7.5% last year. Because of the expected slowdown of the global economy, the Philippine economy is forecasted to grow by around 6.5% this year, but still one of the highest, if not the highest growth rate in the Asia-Pacific region. On inflation, the average inflation in 2022 was 5.8%, exceeding the target range of 2 to 4%. But as a result of both monetary and fiscal actions, we expect inflation to range from 2.5 to 4.5% in 2023 and return to the target range of 2 to 4% in 2024 until 2028. The point I'm making is that the growth and price stability objectives of any government can be achieved if the leaders and policymakers are able and willing to adopt the appropriate monetary and fiscal policies. The impending climate disaster is another matter. A concerted global action supported by a well-funded and strong international organization like a revitalized United Nations is needed. Each country may individually pursue a robust, inclusive, and green growth. Collectively, it might also help approximate the ideal situation. In a perfect world, there is no substitute for a strong, well-funded institution that can tax the emitters and compensate the sufferers. In summary, while the challenges we face today are grand and complex, these are not insurmountable. There is much we can accomplish with the right policy tools, decisive action, and commitment to global cooperation. Thank you.
Thank you, Mr. Jokno. I think it's very well said. Even though the challenges are daunting, yet at the same time, if we have the collective resolve and also commitment to solve them, definitely we can, just like what you've just illustrated in terms of your achievements back in the Philippines. We are joined by another finance minister, apart from Mr. Jokno, is our friend, Minister of Finance in Thailand, Mr. Akom Thepitiyapase, who just chaired a very successful APEC finance ministers meeting and just hosted the APEC leaders meeting. So I would now like to pass the time to Akom to share with us his thoughts in terms of how countries can work better together for a more resilient and inclusive future. Mr. Akom, please.
Thank you very much. Can you hear me?
Yes, perfectly.
Okay. Thank you very much, dear Excellencies, dear distinguished participants, ladies and gentlemen. It is quite obvious that the economies have recognized their vulnerability to climate change, as well as other sustainability-related risks. Hence, the needs to move to a more sustainable economy. Such needs have been reflected in global agreement to curb carbon emission from the Kyoto Protocol to net zero target set as the 26th United Nations Climate Change Conference of the Parties, or COP26. Such agreements highlight, to some extent, the good global cooperation can do to address global problems. As the climate and environment issues become more severe and have a widespread impact to all economies, it is everyone's responsibility to take change. Governments could take a leading and proactive role by actively developing an ecosystem for sustainable finance with collaboration from every stakeholder. Within financial sector, co-investment in green growth with the private sector, equally sharing the risk and reward from such endeavors, and fostering the development of green infrastructure and other sectors related to the environment. Fortunately, some groundwork for the development of ecosystem for sustainable finance has already been laid at a domestic and regional level. This includes, for example, taxonomy for sustainable economies and green bond standards, the ASEAN taxonomy and initiative under the ASEAN finance ministers and central bank governors to promote sustainable activities and investment is yet another example of how multilateralism can be leveraged to great effect. Other than sustainable finance, I believe global cooperation coupled with a strong commitment and political will can be the key to unlocking solutions to other global issues as well. What we need to bear in mind is that we should ensure that the benefit of global cooperation be conferred not only to already well-off, but also to the vulnerable groups too. As governments, this could take the form of targeted subsidies or appropriate redistributive policies. Only then can the faith in globalization be restored. Thank you very much.
Thank you, Akom. I remember when I attended the APEC meetings, the theme for that is about digitization and sustainable finance. And that's why your view on taxonomy is so important. And talk about taxonomy, of course, is closely linked to regulation. And that's why today we also have a regulator to join us. We'll now have Mr. Jean-Paul Servas, Chairman of the Financial Services and Market Authority from Belgium, to share with us his thoughts on how countries can work together.
Although I regret not being able to be with you in Hong Kong, it is with great pleasure that I would like to provide you with the views of a financial regulator on the importance of global cooperation in financial markets regulation. Of course, I will speak both as chair of the Belgium FSMA, the Belgium Financial Services and Market Authority, and as chair of the board of IOSCO, the well-known international organization of Securities Commission, the world standard setter for financial markets. But let me begin by saying that as chair of the Belgium FSMA, I have long held excellent bilateral relationship with our colleagues from the Hong Kong Securities and Future Commission, with whom we are in regulated dialogue. And I especially salute Mrs. Julia Leung, the newly appointed CEO of the SFC, will also speak during this event. In the interconnected world of finance, it goes without saying that international membership organizations such as IOSCO play an instrumental, a key role. The IOSCO membership of securities supervisor regulates more than 95%, yes, 95% of the world financial market across 130 jurisdictions. In other words, it means that IOSCO is the place to be when you intend to discuss about regulation related to world's financial market. And as IOSCO board chair, it is my strong view that despite the risk of fragmentation arising for geopolitical tension, global trends in our remit, such as, for instance, crypto asset or climate change risk, can benefit by definition from a globally coordinated response. Therefore, IOSCO is working at unprecedented speed to deliver on its priorities and will be delivering key output in 2023, especially in 3 areas. First, we will take further steps to address vulnerabilities arising from non-bank financial intermediation. Secondly, IOSCO will contribute to the rapid rollout of global crypto standards following the recent crypto winter and the FTX collapse. Last but not least, thirdly, and as outlined on behalf of IOSCO at COP27 in Sharm el-Sheikh 3 months ago, IOSCO is focusing on sustainable finance with the aim of protecting investors by mitigating greenwashing and promoting well-functioning carbon markets. Therefore, IOSCO set out its expectation that both sustainability-related disclosure and Asian standards should be ready for use by corporates, by preparers, by issuers, by investors, by auditors for the end 2024 accounts. And in this respect, the ISSB, the International Sustainability Standards Board, is currently finalizing the drafting of global standards for climate disclosure and general requirements. Once published, it will be IOSCO's responsibility to consider a potential endorsement of the ISSB standards. And a potential endorsement should be a game changer, yes indeed, a real game changer, and give impetus for the adoption of a first global and inclusive baseline for sustainability-related disclosure by corporate. And that's exactly what John and Mary in the street are waiting from the community of supervisors. John and Mary in the street would like to invest in product, in public companies, which can be matched by the expectation about sustainable finance. They are not interested at all in using an alphabet soup. They would like to use one global set of standards, take into account different objectives. And what does it mean, this objective? For instance, to have the possibility to work with a global and inclusive baseline for sustainability-related disclosure by corporates, and maximizing interoperability between the global baseline and jurisdictional framework will be an important factor in IOSCO endorsement decision. This will be essential to avoid moving from the so-called alphabet soup of private initiative to an alphabet soup of regulatory requirement. And therefore, I welcome the IFRS Foundation work to address global entities' diverse levels of ability and preparedness to implement the finance standard. Across these 3 areas, NBFI, digital finance, and sustainable finance, the global cooperation and coordination work of IOSCO will have lasting and positive consequences on the ways the financial sector operates. Ladies and gentlemen, thank you for your attention.
Thank you, Mr. Savas. And just now from the speakers, we hear a lot about green, about tech, about challenges. But I think there's one common theme across these ideas is that innovation can actually be a very effective solution to all these challenges and issues. And that's why today, having heard from the national leaders, we also have representatives from the multilateral banks, including Mr. Zhang Tao, who's the Chief Rep of the Asia-Pacific region from the BIS. And BIS has been working closely with us with the Innovation Hub in Hong Kong. So I think this is very opportune for him to share with us how he sees innovation and also how innovation can be used as a tool to foster international collaboration. Mr. Zhang, please.
Thank you. Thank you, Chris. And of course, let me first thank the organizers of the Asian Financial Forum for inviting me to be here. I was here actually in 2017, so it is very heartening for me to be back in person to see friends and colleagues here. Thank you. So let me focus on my remarks on the role of the multilateral institutions including, of course, the BIS, or the Bank for International Settlement, where I'm working with, in terms of the fostering the global cooperations and collaborations. First, let me say a few words about the BIS. As some of you have known, the BIS is one of the oldest global financial institutions in the world. We often called ourselves the bank of the central banks. So in sense, we are a group of the central banks around the world. All of the major central banks around the world are our members, and including 13 banks in Asia and Pacific regions, such as the People's Bank of China, and the Hong Kong MA, and of course the Reserve Bank of India, and the Bank of Thailand, etc. So we're very proud and also very appreciated for the Hong Kong MA and the city for hosting us for our operations in the Asia Pacific during the last 25 years. So we are celebrating our 25th anniversaries here in Hong Kong this year. In terms of our work, we pretty much focus on our work in following four main areas. So I just do a little bit of promotion here for our BIS. One is, this is a platform for central banks to get together to cooperate in terms of the sharing the informations, making their actions more coordinated, and particularly the central bankers, including Ben, he was formerly the governor of the Central Bank of Philippines. We gathered in Basel and elsewhere quite regularly, and to compare the notes. So that contribute greatly the thinkings of the central banks around the world. That's one. And second, we provide banking services to our central bank clients, particularly in terms of the asset management, and provide short-term liquidities in case needed. And third, of course, very importantly, we provide secretarial services to quite a few number of the very important standard setting committees, such as the Basel committees for bankings, and the BPMI, and also the FSB, as you know. And the work, of course, including working on the Basel I, Basel II, Basel III, and many of the now on the regulation side in terms of the financial stabilities. And in doing so, staff of the BIS published tremendously, and also formulate quite a few number of the flagship publications. And what is most important, all of these publications are free. So you can look for it on the internet. And these publications very much reflect the staff independent research, of course, in terms of the interactions with their central bank colleagues around the world. So it is, in my view, is the reflections of their thinkings, how they guide their central bank policies and regulations. So I suggest, highly recommend you can follow on that. And of course, the new area, the fourth area is, as just Chris mentioned it, we step up our effort in terms of the promoting innovations in the areas of how to use the technologies. We set up quite a few number of something called innovation hub centers around the world, including the 2 centers in Asia. One is here in Hong Kong, the other one is in Singapore. They have conduct many projects. One of the just using as examples, as many cited these days, the M-Bridge project, which is the cross-border digital payment systems using the high-tech, new technologies, and with the participating central banks, currently including Hong Kong MA, PBOC, and Bank of Thailand, and the Central Bank of UAE. So that's what we are doing now. And in terms of the questions raised by Chris, I just want to say a few words. What is we are focused now on in terms of the global cooperations. As we know, we are a collections of the major central bank around the world, and right now the foremost important task for us is how to keep the global inflation low and stable. The world is facing the tremendous challenge starting from early 2022 with the rising inflations. The most important mandate for the central bank is try to get the inflation down to their target. As we know, the inflation is the most regressive tax of all, and disproportionately hurts the most vulnerable of the societies. So by keeping inflation low and stable, we could create an environment that encouraged firms and households to do their business in terms of promoting the productive activities and also foster the innovations. And we are very happy to see this forum had the focus on innovations, and that has to build on the environment in terms of the low inflations and stable. So inflation and keep the financial stability is our task, and that's what we're focused on at this moment. Well, thank you.
Thank you, Zhang Tao. In fact, I think he points out a very important issue about green. And just last year in September, I went to Manila, of course, met Mr. Joknok, and also went to the ADB annual meeting. It was first successfully held, yet at the same time, it is the first physical annual meeting since COVID. So I would like to hear from Teresa your thoughts in terms of experience then, and also what are your future plans in terms of generating greener economy across Asia.
Thank you, Mr. Chair. And it is really a pleasure and honor for us to join you today. Vice President Said sends his regrets for being unable to join. Let me begin by reiterating the messages that may have already been mentioned by other speakers. While most countries are recovering from the impact of COVID-19, the world and our region still face multiple challenges. The supply-side shocks, policy constraints, and tighter financial conditions are putting downward pressure on the growth prospects. ADB forecasts a slow global economic growth in 2023. We have downgraded our growth forecast for the G3 economies, US, Japan, and the Euro area, to 0.4% in 2023. Developing Asia is projected to grow 4.6% in 2023, with considerable uncertainties. Against a short-term headwind, the world faces significant long-term challenges, particularly climate change. Asia's development has been carbon-intensive. The region accounts for more than half of the global carbon dioxide emissions. The region is also likely to suffer disproportionately from climate change. In the past 12 months, we have witnessed devastating climate impacts. Historically bad flooding in Pakistan, floods and cyclones in Bangladesh, and floods and droughts in the People's Republic of China. The world needs a rapid and just transition toward net zero. Impact investments toward carbon neutrality are required. We must also adapt to climate change. The Global Commission on Adaptation estimates that investing $1.8 trillion from 2020 to 2030 in adaptation could generate as much as $7.1 trillion in benefits. Turning to ADB, we are working to solidify our role as a climate bank in the region. In 2021, ADB raised its ambition to $100 billion climate financing during 2019 to 2030. From 2019 to 2022, ADB has already invested $20.4 equivalent in billions in climate change projects. ADB is also scaling up innovative financing solutions, for example, by piloting first an energy transition mechanism to leverage market-based approaches to retire coal power assets earlier. Second, establishing the innovative financing for climate in Asia and the Pacific, which catalyzes climate finance by drawing in contingent finance and grant resources from donor countries. And third, setting up the Community Resilience Financing Partnership Facility that supports climate adaptation at the community level, explicitly addressing the nexus between climate change, poverty, and gender. Tackling climate change is beyond the ability of any single country. Global cooperation is essential. Let me now turn to the topic of globalization and regional cooperation. Globalization has delivered extraordinary outcomes to the developing world, and Asia has been one of the biggest beneficiaries of globalization and stands to lose if the globalization trend was reversed. ADB is actively promoting regional cooperation and considers it a driver for globalization. We have acted as a financier, an honest broker, and a knowledge provider for regional cooperation. Particularly, we have established multiple regional mechanisms, such as the Greater Mekong Subregion, Central Asia Regional Economic Cooperation Program. And in 2021, ADB's investments facilitated $1 billion worth of trade and investments in the region. I am convinced that global trade and investment will remain essential for driving growth in both advanced and developing countries. With the rapidly changing global trade landscape, new rules such as cross-border data flows, taxation of digital services trade, and climate change commitments all require greater global and regional cooperation. Let me conclude by emphasizing that the world faces multiple challenges and shocks. Meanwhile, we jointly face the fundamental challenge on climate change. Every challenge presents opportunities, and it is imperative for us to embrace the challenges to support a sustainable and inclusive economic recovery. Global cooperation will be key to achieve our common objectives. Thank you.
Thank you, Teresa. Just now you mentioned about financing. Of course, the next question to ask is financing for what? I think one of the investees definitely is about infrastructure, because for economies continue to grow, infrastructure is important. But to have that in line with the green objective, sustainable infrastructure is the key. And that's why today we have Mr. Jin Liqun, who's the chairman and president of the Asia Infrastructure Investment Bank, here with us. And just recently, he have issued a report concerning sustainable infrastructure towards a connected world. I think all of us are looking forward to see and also hear his thoughts in terms of how we can bring about more infrastructural development here in Asia, yet at the same time in line with the green development. So may I now invite Mr. Jin?
Thank you. Thank you, Chris. I think there's a technical glitch and probably you cannot see me, but can you hear me?
Yeah, we saw you just
Okay.
now before you speak, so it's okay.
It's fine. I think there's some problems. But good morning, ladies and gentlemen. Thank you, Chris. Thank you very much. I'm extremely sorry that I cannot attend AFF in person. I wish I could be in the conference room with all of you. But actually, I was twice in Hong Kong a couple of weeks ago, and I shared the pleasure of enjoying the normal business and daily life in Hong Kong. The world is grappling with many challenges at the same time: climate change, persistent high inflation, intensifying geopolitical tensions, and disruptions to global trade and supply chains, to name a few. In this environment, multilateralism or global cooperation is more imperative than ever. A cohesive, collective response is needed from national governments, development partners, and private sector players alike if we are to overcome the challenges ahead. A future without multilateralism is too chillingly bleak to be conceivable, especially for those vulnerable, fragile, and small developing countries beset with troubles, such as high indebtedness, poverty, environmental degradation, and being at the mercy of climate change. During these tough times, multilateral institutions are a haven for continued cooperation and most beneficial to particularly small economies. That is why AIIB's governance was structured to give developing members a large voice. As a new MDB established against the backdrop of the Paris Agreement, AIIB recognizes the role that it must play in extending its financial support to those who need it most. It is imperative that we work together to help our least developed members weather the multiple crises that humanity faces. First, we are building strategic partnerships and strengthening regional cooperation. Both are critical for tackling global challenges, and both are at the heart of our bank's mandate. Partnerships have been crucial for our bank's rapid response to members' emergency needs as the COVID-19 pandemic began sweeping across the world. Our strong partnership with the World Bank, ADB, and other peer MDBs renders it possible to keep our members' economies moving and boost their public health care capacity in their time of greatest need. Secondly, we are very focused on deepening collaboration with the private sector to mobilize greater amounts of capital for sustainable development goals. If humanity's effort to limit global warming to within 1.5 degrees is to be successful, annual climate financing must grow to 4.5 to 5 trillion US dollars annually by 2030, up from 650 billion in 2020. According to the IPCC, while sufficient capital and liquidity exist globally to meet this task, current financial flows are 3 to 6 times lower than what is needed, particularly for developed economies. Clearly, much remains to be done in mobilizing private capital to meet the formidable challenges we have to address ahead of us. We are also mobilizing private capital by providing equity and debt to fund managers and financial intermediaries to spur broader investment into developing assets, technologies, and frontier markets. By creating products such as green bonds and asset-backed securities, we seek to broaden investment even further. Our bank has approved $1.2 billion of investment in green and sustainable bonds across Asia, including the Asian climate bond portfolio. In less than 3 years, our bank's sustainable bond framework has also gained a strong investor base with a portfolio of $8.5 billion in issued bonds, with 100% of the proceeds aimed at sustainable development goals. I'd like to close with a few more words about Hong Kong. Hong Kong boasts the second largest foreign exchange market in Asia and fourth largest in the world. Hong Kong possesses immense potential to emerge as Asia's green finance hub. Hong Kong's ability to mobilize capital towards the economy of tomorrow is clear. Of 67 IPOs launched in 2022, 72% of the $87 billion in capital raised on the Hong Kong Stock Exchange was directed towards new economy ventures. Hong Kong's magnetic attraction for the players in the global capital market and the private sector is attributable to its rule of law and unswerving enforcement. The governance is of international standards and it's transparent. And we have firm conviction that Hong Kong will maintain its status as one of the most important international financial centers. With its close proximity to some of the biggest carbon markets in the world, Hong Kong is well placed to become a regional carbon credit trading hub, matching the financing needs of greenhouse gas reduction projects in China with global investors and emitters. As one of the world's most active and liquid financial markets, Hong Kong definitely can play an outsized role in mobilizing financial resources towards Asia's net zero transition. Thank you very much.
Thank you, Mr. Dean. Just now you mentioned a very important point regarding how we can bring the vulnerables along as we grow the economies. And in fact, if you look at the recent speech made by the president of the Islamic Development Bank at G20, he mentioned indeed boosting recovery, tackling poverty, and rebuilding resilience are actually the key themes that the bank will focus on. That's why today we have invited Professor Samir Iqbal, who is the CFO of the Islamic Development Bank, to share with us their future plans in that regard. Professor, please.
Thank you, Christopher, for your kind introduction. Excellencies, distinguished guests, ladies and gentlemen, a very good morning to you all. It is an honor for me to participate at the 2023 Asian Financial Forum, representing the Islamic Development Bank, which is a AAA-rated multilateral development bank with 57 member countries spanning over 4 continents. As a development financial institution, fostering cooperation is at the heart of every intervention as we look to engage in global as well as local partnerships towards financing sustainable development. Partnerships are critical to international developmental work and to achieving development effectiveness as captured in SDG 17, Partnerships for the Goals. At our end, the bank is scaling up our own partnership work and refocusing its engagement with development partners with the aim of achieving better results and development outcomes in member countries. At present, multilateral cooperation is very relevant and valuable, particularly now when our member countries are facing unprecedented challenges in the wake of global uncertainties due to the aftermath of COVID-19 pandemic and the geopolitical crisis in Eastern Europe. The scale and the scope of international cooperation is essential in determining the magnitude of economies of scale in integrating markets. In this context, we encourage all MDBs to enhance their roles to facilitate regional and multilateral cooperation as knowledge brokers, capacity developers, and fund financiers. This important work should continue with the aim of building more trust within communities, both local and institutional, enhancing capacity and expanding resource mobilization. This will also help to avoid the general pitfalls of the mistrust of the international development order, whereby multilateralism could be challenged as not doing enough. In order to address this concern, it's extremely important to focus on key priority areas such as infrastructure connectivity, social and financial inclusion, and the climate change. Sustainable infrastructure connectivity is one of the main facilitators of the regional and global cooperation because it encourages the private sector to expand into larger markets and capitalize gain on international specialization by joining regional and global production networks. Especially transport, energy, and ICT connectivity plays a great role in facilitating trade and investment flows between the countries. Therefore, further investments in these key connectivity sectors are needed to address today's emerging challenges. Now, based on the COVID-19 experience, international organizations such as Islamic Development Bank are well positioned to support the global agenda of inclusiveness with an emphasis on economic diversification and resilience, investment in digital technologies and innovation, and upgrading of workforce skills and digital literacy. Financial inclusion is one of the most important ways of achieving larger impact in communities, especially disadvantaged populations where the vulnerability has increased multifold due to pandemic, the subsequent economic volatility, and the food insecurity as supply chains snapped. Finally, I'm sure you all agree that the strong intention across the board need to be followed through with commensurate actions towards the greening of financial systems, which is critical for new economic realities. We have done extensive work with our peer MTBs on Paris alignment and currently finalizing approaches towards being 100% aligned. This would help define areas where climate finance and development resources need to be directed and prioritized in the context of recovery and restart, and how private sector capital may be mobilized for recovery and long-term plans in line with climate goals. The bank has also updated its overall strategy to consider emerging issues including COVID-19 pandemic, sustainable development goals, and transition to low carbon and climate resilient future. By mobilizing green financing, the bank has developed a robust, sustainable finance framework that is in line with the global green bond principles, the social bond principles, and the sustainability bond guidelines as set by the International Capital Market Association. Under this framework, the bank has mobilized more than $5 billion to date for climate-friendly as well as social development projects. We strongly advocate for leveraging on innovative risk-sharing instruments such as advocated by Islamic Finance to strengthen the capacity of our member countries in their road to SDGs. This would help to build a future that reflects deep commitment to implementing 2030 Agenda for Sustainable Development as articulated in the SDGs, and to the building stronger partnerships to achieve those goals for all, leaving no one behind. With these thoughts, I conclude and would like to thank the organizers once again for their sincere efforts in putting this forum together. Thank you.
Thank you, Professor Iqbal. I think today's discussion really generates a lot of food for thought, and most importantly, a lot of hope for us as we start off the year 2023. So before we close off, maybe I'll have our stage, have each of our panelists to summarize in one sentence. What's your wish for the year 2023? Maybe Teresa first.
I would say globalization. Globalization should not retreat. This is essential for continuing growth from which the region can achieve its development outcomes. Thank you.
Thank you. Mr. Zhang?
Thank you. Let's hope 2023 is a year with lower inflation. And of course, with the joint effort globally, we're looking for a better years of the prosperities. Thank you.
Mr. No?
Well, I agree that globalization is the biggest challenge for humanity. The usual inflation and the slow growth, that can be addressed by the right policies. But to me, that globalization is still the major problem faced by all people.
Okay. Thank you. Professor Iqbal?
Yes, thank you. You know, I'm coming from the finance perspective, so I hope that 2023 brings more closer partnerships and innovation between the public and private resources to mobilize financing, very much financing for the development. Because given the increased interest rates environment, it is very difficult to mobilize financing for the development, whereas also the member countries, the emerging developing countries also have their own fiscal challenges. Therefore, my hope is that we can bring both public and private sector together to mobilize more development financing. Thank you.
Okay, Mr. Jin, finally.
First, I hope peace would be restored in some parts of this world and geopolitical tension would be eased. Thereby, we would enjoy a more favorable global environment for tackling inflation, unemployment, and disruptions to the global production chain. Thank you very much.
Thank you. And on this positive note, let's conclude this session. And also good health to all of you and Happy New Year. At the same time, let's give them a round of applause to our panelists. Thank you.
And a big thank you to Mr. Hui and all our panel speakers. Could you please come to the front of the stage for a group photo before you go? Yes, just gather in the middle of the stage and our photographers are ready to take the photo. While they're doing that, I'll just tell you a little bit more about what's happening next. The other thing is, in case you do miss out on any sessions, because sometimes the sessions are running at the same time, or if you'd like to revisit some of our panel sessions, you can do that because we have a video on demand section in the AFF virtual event platform. So don't worry about missing out. You can always go back to watch the videos on demand. To help you have a smooth day, on-site participants can redeem a $100 dining voucher. You can get it at the information counter in Hall 5C or the registration counter in Hall 5D. And you can use it to enjoy a hassle-free lunch while you're here at the AFF. And I'd like to take the opportunity to thank our keynote luncheon sponsor, China International Capital Corporation, for providing this dining voucher to our participants. And looking ahead to our lunch, for the guests who are invited to the keynote luncheon, just a reminder to go promptly to the meeting room N201, which is the lunch venue, with your e-invitation at 12:15. If you're not attending the lunch, you can still see the live feed of the keynote luncheon. It'll be broadcast at the Vision, which is Hall 5E, and it will also be on the AFF virtual platform. So even if you're not attending, you won't miss out. We are going to take a short break now for about 15 minutes. Yes, 15 minutes. So please go and visit our exhibitors at their booths. They're very keen to see you and to share some of their latest technologies and the service that they provide and explore collaboration opportunities. Coming up here a bit later is the presentation by PwC, Financing the Corporate Transition to a Sustainable Future. We'll start that here at 11:50. So in the meantime, feel free to drop by the Business Lounge at Hall 5E Concourse, where you can get a cup of coffee before exploring our other booths and exhibitors. And don't forget to visit the FinTech Showcase and the InnoVenture Salon. Finally, when you leave, please do take all your personal belongings with you, and please return your SI headsets if you've borrowed one. Enjoy your break, and we'll see you back here at 10:50.
呢個夾嘢我唔使啦，我就咁擺喺度啦，係嘛？得唔得？
Ladies and gentlemen, thanks for joining us. Please come back into Inspiration Hall. Our next session, the presentation by PwC, Financing the Corporate Transition to a Sustainable Future, will begin very soon. We'd love you to be part of it, so please come in and take a seat. Ladies and gentlemen, please come into Inspiration Hall and take a seat so we can begin our next session very shortly. Once again, ladies and gentlemen, can I encourage you to come into Inspiration Hall and take a seat? We will begin the next session in just a moment. We'd like to have as many of you as possible here in the room. Thank you, ladies and gentlemen, for joining us. If you're still on your way, please come in and take a seat in the room as we'll begin the next session of the Asian Financial Forum. I hope you're all enjoying the morning so far. As the AFF's knowledge partner, PwC is going to share with us how business communities are driving and financing their ESG transformation, as well as what the future holds for Hong Kong in developing green finance and helping corporations transition towards sustainability. So I'm delighted to invite Mr. Raymond Chow, Asia Pacific and China Chairman of PwC, to the stage to tell us all about it. Mr. Chow, please give him a warm welcome. Thanks, Raymond.
Okay, good. Hey, good morning, ladies and gentlemen. I'm absolutely delighted to be standing up here this morning to share with you the findings of a joint survey, post-survey, that was done by the TDC together with the Hong Kong TDC together with PwC. And it's an important time to do a survey like this, a post-survey, to gauge how organizations in Hong Kong are tackling with and their current position, and what are some of the challenges that they're dealing with in terms of dealing with or addressing one of the most important issues today, which is about ESG, and also within ESG, obviously there's climate issues, et cetera, et cetera. So I'm very pleased to be sharing with you the results of the survey and hopefully provide some insights, at least on a high-level basis, and where things are at. Let me see if I can get the slides up. It's there. The topic of discussion that's gaining increasing importance is clearly ESG, and we all know, sitting here, all of us in businesses, all of us in public service, governments are recognizing the need for us to address very quickly and work together. The key words here is working together to address a global issue. We have all heard of a lot of different geopolitical tensions, issues all the time over the last little while, and they're very challenging. And the fact is, and ESG and specific climate issues and other issues relating to ESGs have no borders. Let's rise above all of the geopolitics and work together to deal with some of these issues, which is critical for the survival of humankind and for this world that we all love and live in. The good news is a number of activities in the past years, actually over just the last 3 months, have hopefully continued to move the needle forward for ESG development. COP27 in Egypt in November, and there was a historical landmark, historical agreement that was made to establish a loss and damage fund for nations under severe climate risks. So that's a significant step forward. It's been in discussion for years, and finally an agreement's been landed, and that's good news. And then also COP15 in Montreal just last month in December, a landmark agreement was signed to stop biodiversity loss by 2030, again, and landmark deal that was achieved. And both of those are great, amongst other things. The question is, and it's like everything else, the devil is actually in the details. How do you actually execute the agreement? And great example, obviously, and there's been a lot of discussion, is who's going to be doing the funding, who's providing the funding, and how is the funding going to be distributed to those that's in need of the funds. Even for biodiversity, is the same thing. Is a great ambition to stop some of the losses. Again, the devil is how do you actually get into the detail and how do you actually execute that? The post-survey that was done with the Hong Kong TDC and together with PwC, we surveyed a number of organizations in Hong Kong. And the objective is really on three things. How organizations in Hong Kong are driving their ESG agenda and transformation. And then secondly, how are they financing their transition to a more sustainable future in terms of executing their ESG transformation agenda. And then thirdly, just looking at Hong Kong as a whole, the future of Hong Kong as a regional green finance hub. Let me just go through the survey results very quickly with you. And the first one here that you see is important. The good news is we're seeing that there's a continuing heightened awareness, if I may, or enthusiasm or interest on the ESG transformation agenda for organizations in Hong Kong. And that accounts for 66% of the respondents have either made or have made some kind of a commitment to achieve net zero. And that's good. That's on a positive note. Now, on the less positive note, now 66% of organizations, but what we need is to get it up to 100%. But we're only at about 2/3 at this point, right? But it is growing, and hopefully if we come back to this, to ask the same survey question next year with the organizations, we're going to get to close to 100%, and we need to. The less positive news is out of the 66%, actually, only 15% have made a science-based target commitment. That's important. 15%, we can all sit here and debate. We want more people to make commitments. Everybody needs to make a commitment, and that commitment needs to be science-based in order for the proper measurement and reporting. So we have a job to do. We need to continue to push for the awareness and the focus on the ESG agenda in the boardrooms. If I move to the next slide here, whilst ESG is becoming high on the agenda, and what are some of the actions that's being taken? And the good news is you see that more than half the respondents are adopting the alternative energy sources. In fact, at PwC, all of our offices have switched to 100% renewable energy. And with the various standards coming, hopefully coming to life, you get into the Scope 1, Scope 2, so energy requirements is Scope 1, Scope 2, but more importantly, how do you get into the Scope 3? And you see that 48% of organizations, which is actually not bad, as organizations gear up to adjust their supply chain and ensure that they collect the right data for the supply chain. So Scope 3 requirements is actually going beyond what you own and what you are the emissions that your company, your organization is emitting at this point, but is going into the entire supply chain, making up your products, the upstream and downstream, and that gets a lot more challenging, and it needs a lot of preparation as we move forward. Now, if I move to the next one, next slide here, is sort of asking the respondents. Well, 66% of them have made some sort of a commitment and are taking actions in terms of looking at how to reduce their emissions. Then we also want to understand what is, and it's important, how do they see the perceived benefit of getting onto the ESG agenda and transformation? And to me, that's very important. A boardroom discussion around ESG and at least for me, with my clients, I know every one of my clients is pretty much has ESG on their agenda. And the good news from this slide is, if you look through all of the items, the word that I think is important is longer terms. And I think it is very positive to see that organizations, or at least our respondents, see the perceived benefits of ESG transformation for the longer term. And in fact, it's very clear. Organizations are reporting to a wider group of stakeholders today than they were yesterday. It's beyond the shareholders. So the the previous approach of focusing on maximizing profit for the shareholders is much broader than that in the boardroom today. There's a wider group of stakeholders and organization needs to demonstrate their responsibility, their social responsibility, and their responsibility specifically on how they're managing emissions. And that's expected in the market. That's expected by, and it's not just a compliance exercise as you see this. Our respondents understand this is more than a compliance exercise. It is what the broader stakeholders expect and what the investors expect. And they're saying, and it's good news to see that, that there's a potential to lower capital cost, the cost of capital for organization, and to broaden the investor space. So I was very pleased to see that. In fact, there's been a study that I saw, that I read. It was very clear. There's a strong correlation between companies, ESG characteristics. So companies who's working on the ESG agenda, disclosing their work and their actions on ESG, and the correlation between the company, their ESG commitment to, and the valuation of their stocks. This is very different from before, whereas it's just short-term profitability. So market expects that. See where I am. Sorry, I'm just losing. Let me take a look at the challenges. Oops, I keep losing the slides here. Sorry. All right, let me just take a look at very quickly and share with you the comments from the respondents from organizations here. And what are some of the challenges as they continue to work on the ESG agenda? And they're really, I'll just be very quick here and summarize it. There are really two big points here. One is lack of expertise. And clearly, talent is a big problem. It's very difficult to recruit the right talent. And that's not Hong Kong, that's not just Asia-Pac. It is actually across the global world today that we need to continue to develop talent in this space. The other challenge for organizations is the fact that they do not see enough policy incentives as they continue to invest and drive transformation in this area. So this is an important message for the public sector and for organizations to continue to work together with the public sector, identifying efficient and effective policies to drive the ESG agenda. Let me go to the next part of the survey, and some of the findings here is actually quite interesting. And this one particularly, I thought it was very interesting. And it probably reflects reality of today. The good news, again, is the positive news is 76% of the respondents are continuing to increase their investment in ESG activities and transformation. 76%, that's good, right? The not so good news is that's actually a decline of 13% from prior year, all right? So that's not so good. And why is that happening? So if we really drill down a little further, and it's kind of hard with the Pulse survey, but one of the major reasons is obviously because of the economic slowdown, and organizations are trying to balance between short-term maintaining and driving short-term profitability and investing in ESG agenda. And that's sort of understandable, but that's the balance that we need to strike. And if I share some statistics with you, and to me that is important, and for all of us sitting here today, and for organizations and for governments to understand that ESG is obviously not just short-term. I just mentioned before there's a correlation between how the market expects organization to be working on the ESG agenda, and that has strong correlation to the valuation of the company. So it's not just short-term, and it's more than just profitability. And then secondly, if I just share some background statistics with you and how this is important, that we cannot slow down our investment in ESG. and our activities in driving ESG activities. If I look at, just to share with you very quickly, in Asia Pacific, in the region, the decarbonization rate that we achieved was 1.2% in 2021, right? But in order for us to achieve to make sure that we limit global warming to 1.5 degrees Celsius by 2030, what is required is annually, we need to achieve a decarbonization rate of 15.2%. So we were at 1.2% last year. And by the way, Asia-Pac was much better than the rest of the world. It was slightly better. The rest of the world achieved decarbonization rate at half of 1%. So, but even at 1.2%, we need to accelerate 13 times more in order to try and achieve that, to limit that global warming to 1.5 degrees. So that's very important for us to remember. If I look at this slide, sort of the funding for ESG activities. Again, the finding from this pulse survey was most of the organization is still looking to internal cash flow to fund their activities. Is that good enough? To me, I think, again, we need to think about it. Why there's only very limited activities in terms of financing through bank loans or bonds. Are we not doing enough? And to me, it is very important for us to understand. If it is just private internal cash flow, we will never. Another piece of statistics to share with the group. We need over $90 trillion of private investment in infrastructure build. And therefore, everybody needs to get it. External financing, green bond financing, bank loans, etc., are a critical part of achieving that investment level going forward. Why are organizations just using internal cash to finance their activities today? It's primarily because inflation, interest rates are a little high, so debt financing are now more expensive with the increase in interest rate level and tighter credit markets. And then there's another point which is important. It was the lack of common taxonomy, metrics, and market data increase the transaction cost of green financing. Now, very, very quickly, I think I'm running out of time here on this next slide, which is just talk about Hong Kong as a regional hub. So moving forward, what can we expect from Hong Kong as the city continues to develop into a regional green finance hub? The good news is there's no shortage of opportunities for green finance development in the city, especially with the opportunities brought about by the development of a unified carbon emissions trading market in the Greater Bay Area, the launch of the Hong Kong International Carbon Market Council and Core Climate, as well as the Green and Sustainable Finance grant scheme that aims to provide subsidies to green bond issuers and loan borrowers. That said, a significant opportunity identified by our respondents is the development of common taxonomy for ESG reporting and disclosures. Now, to further build trust to address the urgent needs for better information about climate-related matters, harmonization of ESG reporting framework is important, and that is happening, and we should hopefully expect ISSB standards to be coming out in either this first quarter or the next quarter of this year. And Hong Kong, obviously, the Hong Kong Exchange requires TCFD framework disclosure by 2025, but more work is needed there, and what gets measured gets done. So it is important that we get to that common unified reporting at some point. Now, I'm really running out of time, I've been told. So again, there are clearly this city has a lot of competitive advantage for us to continue to grow the green finance market. And you can see from statistics from the respondents, obviously in terms of maturity of the financial market, in terms of being very international, and particularly with the opening up of the city post-COVID and the proximity to main China. These are all advantages for us as we move forward. And if you look at the, in terms of issuance of green bonds, Hong Kong is well ahead, selling more than $7 billion in sovereignty green bonds across different currencies since 2019. In fact, just last week, not too long ago, our city, this lovely city, raised $5.8 billion for green bonds denominated in 3 currencies, US dollars, euro, and the renminbi, the largest ever green deal that was done. Finally, just a couple of points from the survey which is important, which is updating the tax policies and subsidy schemes. Again, going back to that, policies and incentive schemes for organizations, support organizations in continuing to pursue the ESG agenda, which is very important for us. And then part of it is also raising the awareness about ESG risks in financial services industry to collaborate with cities in the GBA and the wider international community in ESG data sharing, which is, again, a big challenge. So, ladies and gentlemen, I'm going to close here. I've shared with you some of the significant highlights of the Pulse survey that was done, and I think it does provide some very important messages for us. Clearly, if I can just quickly in 2 words, or 2 words, more than 2 words, in a few words, obviously continuing awareness and more organizations are getting into and understanding the importance of the ESG agenda and getting into the board discussion. In terms of commitments made, 66%, 2/3 of respondents, that's positive. The less positive should be 90% or 100%. The less positive is only 15% of those are science-based targets committed. And then you saw the good news is the organization sees the long-term benefit of working on the ESG agenda. The less positive is that there are things that we need to work on so that and the working together part to make this really effective. So ladies and gentlemen, thank you for your time. I'll just pause here. Thank you.
Thank you. Thanks, Raymond. Good job. Thank you very much, Raymond, for sharing your insights. You crammed a lot into that, and there's definitely a lot of issues, a lot of opportunities, and a lot of challenges as companies go through this ESG transformation. But we can only move forward, not backwards. Coming up in just a moment, we have our policy dialogue, and this is designed for us to take an in-depth look at how concerted efforts among global and regional authorities can be enhanced to really promote innovative, impactful, and inclusive economic growth. This session will have some interactive live voting, so we want you to take part in that. And the way you do that is by scanning the QR code, which will be up on the screen. Scanning the QR code will take you to the voting platform where you just choose the voting button, choose your answer, and click on it. There's actually 2 rounds of voting with the same question, one at the beginning and one at the end. So it gives us a chance to see how you feel about some of these issues before you hear our speakers, and whether or not you've changed your mind after hearing our panelists. And for our virtual participants, you're included in this voting as well. All you need to do is select the voting tab on the screen. So our panel chair and our speakers are ready. You'll see there is only one chair on the stage because all the other speakers are virtual. So it's time for us to start our policy dialogue. Please join me in giving a very warm welcome to the panel chair, Mr. Arthur Yuan, Deputy Chief Executive of the Hong Kong Monetary Authority. And our distinguished speakers are joining us virtually. Arthur, I hope you won't be too lonely on the stage.
Thank you very much.
You can take a seat. I will introduce our virtual speakers. Mr. Otávio Damaso, Deputy Governor for Regulation, Central Bank of Brazil. Mr. Dong He, Deputy Director, Monetary and Capital Markets Department of the International Monetary Fund, Ms. Verena Ross, Chair of the European Securities and Markets Authority, and Mr. Hiroto Uehara, Deputy Director General from the Bank of Japan. So, Arthur, I'll hand over to you.
Yeah, thank you very much, Karen. Good morning, everyone. A very warm welcome to all of you to this policy dialogue. As Karen mentioned, you see that I'm the only one on stage. I'm alone, but I'm not lonely because today I'm joined by 4 very eminent speakers for the event. Before I introduce them, let me first of all add my New Year wishes to all of you. I wish all of you good health and a prosperous year of 2023. Now, I'm very honored to have 4 very excellent speakers joining this panel today. I would introduce them according to the order as they appear in the AFF program. First of all, we have Mr. Octavio Damaso, Deputy Governor of the Central Bank of Brazil. We have Mr. Dong He, Deputy Director, Monetary and Capital Markets Department of the International Monetary Fund. We also have Ms. Verena Ross, the Chair of the European Securities and Markets Authority, or in short, ESMA. And finally, we have Mr. Hiroto Uehara, Deputy Director General for Asian Affairs of the Bank of Japan International Department. As you can see on the screen, we have 3 panelists on screen because if you can work out the time difference between Hong Kong and Europe, it would be quite unreasonable for me to drag Verena out of bed halfway through the night to join the panel. So Verena has very kindly agreed to pre-record her messages for us. So thank you very much to the speakers who are actually on screen for joining us today, and for Verena for pre-recording her messages. Now, before I invite the panelists to share their thoughts on for the policy dialogue, let me try to set the stage very briefly on what are the topics that we perhaps should cover. Now, we greeted the new year only about 10 days ago, and if we look back on 2022, it would not, I think, be an understatement for me to describe that as an extremely eventful year. It's characterized by high inflation, unexpected geopolitical turmoil, and aggressive monetary policy tightening by the major central banks around the world. And against that setting, I think that we can expect the world economy to continue to lean towards the downside entering 2023. Now, I don't think that we are looking at a very bad or even catastrophic outcome at the moment, but indeed, the global economy is still set to confront a number of potential risks and uncertainties, in particular in terms of inflation and interest rate outlook. Looking at the capital and financial markets, with rising interest rates, we have actually seen global market conditions tightening since early last year. And so we have seen the bond markets and equities markets facing sharp corrections since early 2022. And notably amongst emerging markets, on the back of the currency appreciation and fund outflows, they were facing quite a bit of pressure last year. In Asia, for example, we have seen very significant bond outflows between February to November last year, and the levels of those outflows actually above those levels that we have seen during the taper tantrum period. While we have seen some inflows coming back recently, any renewed tightening of global financial conditions could, if that should happen, could still pose significant risks for the region going forward. And to make things worse, in that sort of environment when banks were managing the risks that they face, there is a very strong tendency for them to curtail credit flows, and that would add pressure to the already vulnerable sort of economy. But against that light, I would also say that innovation and adoption of fintech or technology more generally could help the credit flows, in particular in connecting users or those who need credits to the providers of credits. and thereby promoting more inclusive growth in the longer run. Now, that would present new business opportunities, but at the same time, with more and newer financial intermediation services being launched, with new players coming into the market, there are also new risks and challenges that we need to face. It is therefore very important for policymakers to continue to monitor and manage the risks arising from those developments. That's just a very quick attempt to set the stage for the discussion for today's panel. And I would pass the stage to the panelists shortly, but as Karen has stolen my line about the live voting, there will be 2 rounds of live voting today. I would like to start the first round of live voting. I would kindly ask the audience to, if you haven't done so, scan the QR code, go to the voting button, and then choose the answer to 2 questions that I will pose to you, and then submit them within the time limits. The first questions that I would like to put to you is, what do you think is the major challenge facing global growth in 2023? One choice, please. So please, if you can, you see the questions on screen, you now have 30 seconds to vote. Okay, I think time's up. Can we see the results of the votes? So geopolitical risk is the top one with 60% of votes. Okay, and the second one is 29% for continued monetary tightening. Now, let me put the second question to you. How likely do you think innovation and technology would bring more benefits than risk to growth? Again, you have 30 seconds to vote. Let's start. Okay, time's up. So can we see the results of the vote, please? Okay, likely. That's the highest percentage. About 55% of people voted, and very likely is 32%. That's good. The reason why we are doing this live vote is we're doing 1 round before the panelist speaks, and we're doing 1 round afterwards to see whether the panelists' remarks would have any bearing on your perspective on these 2 questions. It is also important to do the vote before the panelists speak, so that they can actually take the vote outcomes into account in the remarks. So let me now turn to the panelists for the remarks on the key challenges that we are going to face in 2023 and what policy responses would be necessary. Our first speaker for today is Verena. I've invited her to share her views on how inflation and geopolitical tensions have impacted the European markets, as well as the policy responses required to mitigate those challenges. I've also invited her to talk about the adoption of fintech, or technology more generally, in Europe, and the supervisory and regulatory approach taken in Europe in response to the new risks arising from those trends. Originally, I've actually suggested that she can actually take the 2 separately, one as opening remarks, one as questions. After talking to her, we decided that she would pre-record her remarks on both fronts. So we're going to listen to her remarks on both the recent challenges, policy responses, as well as her take on technology adoption. So let's go to Verena for her insights. I would need the help of TTC colleagues to broadcast her pre-recorded message. Please.
Good morning, afternoon, or evening, depending on where you're located when you're listening to this. I'm very grateful to the organizers to have been invited to participate this year again at the 16th edition of the Asian Financial Forum. I really wish I could have attended this policy dialogue in person, given the time I spent earlier in my career in Hong Kong, a city close to my heart. My name is Verena Ross, and I'm the chair of the European Securities and Markets Authority, ESMA in short. The European Securities and Markets Authority is an independent EU authority that contributes for over 10 years now to enhancing the protection of investors and promoting stable and orderly financial markets in the EU. ESMA fosters coordination and convergence amongst national supervisors in Europe and is also the direct supervisor of certain firms at EU level. Today, I would like to share with you some impressions on how the geopolitical and economic developments have impacted upon European markets and outline the challenges and opportunities I see for our collective work internationally towards addressing these vulnerabilities, and notably how digital innovation can help in this endeavor. The remaining consequences of the pandemic and the March 2020 market turmoil, but also Russia's unprovoked military aggression on Ukraine and the resulting economic fallout, put strains on European and global financial markets. Stresses that we have not seen since the global financial crisis over a decade ago. Even if, at the beginning of 2022, we saw some recovery of the financial markets following the pandemic, against a backdrop of already increasing inflation and a shift in monetary policy, the Russian war on Ukraine saw the recovery faltering, volatility increasing significantly, and a number of market corrections, so impacting directly on the orderly functioning and stability of the EU financial markets. Inflation and monetary policy tightening gathered pace globally. Markets are adjusting to the end of the low interest rate period, which presents a real challenge for multiple sectors, notably the investment management sector. In addition to this, the current high inflation environment is having impacts across the financial markets and consumers, who are faced with fast rising costs of living and negative real returns on many of their investments. We also observed that volatility, bond yields, and spreads in securities markets jumped as inflation drove expectations of higher rates. Equity market prices falls, halting their earlier recovery. The Russian aggression also drove a commodity supply shock, which added to the pre-existing post-pandemic inflation pressures. Invasion-sensitive commodity values surged, particularly energy, impacting natural gas derivatives and highlighting liquidity risk for exposed counterparties. On the other hand, as chair of ESMA, I know that capital markets have the strength and capability to manage through difficult times. Despite high volatility and deterioration in liquidity, markets continue to function in an orderly way. The overall resilience of the European capital markets and its regulatory and supervisory framework, which was severely tested, has been good. In particular, the key financial infrastructures performed well under very stressed conditions. Trading venues and central counterparties managed to operate overall smoothly. The vast majority of financial market participants has adapted effectively to rapidly changing and very difficult conditions. While in the fund sector, the use of liquidity management tools like suspending redemptions increased significantly, most investment funds were able to adequately manage liquidity and meet redemption requests. What these events showed, again, is that we need to continue to work closely together as regulators and supervisors of the financial markets. That is true within Europe, where ESMA is at the core of the European system of financial supervision, but also internationally, After all, we live in a global world with internationally connected financial markets. As we navigate geopolitical challenges, we should always think about ways of enhancing the resiliency, efficiency, and transparency of our capital markets. What additional tools, competencies, or data do supervisors need to do their job? What rules may we need to meet the promises and challenges of technological innovation and to support the necessary shift towards a more sustainable model? We are operating in extraordinary times. As ESMA, we continue to focus on our mandate, financial stability, orderly markets, and investor protection. Firstly, in the context of a changing market ecosystem and uncertainty about future economic conditions, maintaining financial stability is of particular importance. Regarding the non-bank sector risks highlighted in March 2020, ESMA is supportive of a global approach to policy actions and of a convergence of international initiatives. It means improving the risk monitoring and the data access and quality, reducing liquidity risks notably by increasing the use and availability of liquidity management tools, but also preventing the amplification and transmission of shocks. The ongoing review of the EU regulations of regulated and alternative investment funds are oriented in this direction. And to ensure completeness, we are also suggesting to review the EU regulation of money market funds. About handling the impact of Russia's invasion on financial markets, we participated in addressing the big issue, which is now on everyone's mind, the energy crisis. While the root causes of rising energy prices are of a geopolitical nature, the pain is already felt directly by many European citizens and companies. We've drawn up a set of proposals aimed at taming some of the adverse consequences observed in the energy markets, to ensure that excessive volatility is reduced and to improve the overall functioning of commodities markets. At the same time, we must ensure that any measures we take do not transfer the risks from the energy sector into the financial sector. Secondly, in an environment marked by soaring inflation, keeping the retail investor perspective in mind is key. The need for long-term financial planning, coupled with financial and technological innovation, create new needs, but also new ways for retail investors to engage and participate in financial markets. New products and distribution channels create new challenges to these investors that need to tread carefully. Financial supervisors have an important role in mitigating those risks and in providing investors with stable ground on which to stand. Therefore, enhancing the protection of investors, especially retail investors, is a key strategic priority for ESMA. Importantly, this includes providing retail investors with clear, reliable, and understandable information and ensuring availability of unbiased financial advice, while the whole time promoting financial literacy. It is particularly important in a context of an evolving digital landscape. We must continuously assess the effectiveness of our rules and the way we supervise and enforce them. Thirdly, I would like to convey a few thoughts on one of the most crucial topics today, namely sustainability. To say that the demand for sustainable finance products is strong is to state the obvious. ESMA is determined to help in the pursuit of the transition towards sustainable finance and, where possible, to provide guidance to address some of the outstanding challenges. In doing so, we will be driven by the need to increase comparability and reduce complexity. More broadly, we will want to ensure that investors get the right picture to make informed choices about how they want to engage in the sustainability field. In this matter, ESMA's mission is having a particular focus on ensuring integrity of ESG disclosure and preventing greenwashing. Nevertheless, we will only be successful if we can count on a constructive international cooperation to achieve those objectives. As ESMA, we will contribute to this endeavor, working closely with our international partners through IOSCO and the FSB particularly with our fellow regulators and supervisors here in Asia. We can undoubtedly say that digital technologies are reshaping the financial services industry and paving the way for innovative financial products and services for consumers, as well as transforming traditional value chains and giving rise to new business models and entrants. Now, can we hope that digital innovation may help enhancing financial stability and improving efficiency and reliability of financial markets? Yes, it certainly can, if correctly used. Financial and technological innovation, including the development of crypto assets, decentralized finance, and open finance, provide new opportunities for both firms and investors. But simultaneously, these developments create new risks and threats for orderly markets and investor protection. For us at ESMA, we are committed to facilitating technological innovation and effective use of data while ensuring that they are adequately covered by robust and balanced EU rules. Only if we can get that balance right can we protect investors, ensure market integrity, and foster financial stability, while also allowing innovation to flourish. That means that we need to identify new risks that are not addressed within the current regulatory framework, and then we need to take firm action. The EU has been at the forefront of embracing the need for groundbreaking policy considerations. One of the key legislative initiatives is the new safeguard for crypto assets and their service providers, the so-called MiCA, which will be the first such comprehensive crypto asset regulation in the world. But we also have a so-called DORA regulation that will aim at strengthening digital operational resilience standards. We at ESMA will certainly play our key part together with our partners in the EU in implementing those regulations. In addition, data is key to understand the markets, their features and risks, and ultimately protect financial stability. Technological innovation brings new opportunities to the markets and to the investors, but also to the supervisory community. Our objective is to enhance the use of the data sets available, to take a more systematic data-driven approach to regulation and supervision, to pursue further measures to reduce compliance costs, and to develop a pan-European data hub. A lot of work remains to be done in 2023 and beyond. This fast-moving environment requires an active monitoring and responsiveness from authorities both in Europe and globally. And in ESMA, we are committed to stay deeply engaged. The exceptional pace of digital innovation and finance to date shows us that we still only are at the beginning of this new era. Allow me to add one last point. ESMA is firmly committed to playing our role in the EU's overall response to continue to support the efforts of building a stronger and safer capital market for the benefit of all. We will therefore continue to contribute to the international regulatory effort that is looking at the lessons to be learned from the different challenges that we are faced with. Through the work of the international committees, FSB and IOSCO, and cooperating closely with the Hong Kong Securities and Futures Commission, the HKMA, the JFSA, and other Asian and global regulators. Coordination and cooperation at international level is crucial to mitigate the risks and find answers to the new challenges that are common to all of us. Let me end here and thank you once again for the opportunity to speak to you today. Apologies again for not being able to be with you in person and to participate in the interactive panel discussion to follow. I wish you a very successful and interesting rest of the conference. Thank you.
Thank you. Thank you very much, Verena, for her remarks, for sharing with us the latest situation in Europe, as well as her take on the challenges that we are facing in Europe. Verena made many important points in her remarks that we can circle back later on in the panel discussions to cover some of those issues. including how do we make sure that new developments like crypto could be properly regulated. She referred to MiCA and DORA, and the need to ensure that new risks arising from these developments that are not adequately covered by existing regulations should be addressed with firm actions. She also referred to how do we transition to sustainable finance. Overnight, I presume that the audience would have also read the speech by President Chairman Powell of the Federal Reserve, talking about the need to maintain central bank independence in that process and not becoming a climate policy maker ourselves. And indeed, how do we strike a balance between central bank and supervisory independence, and the need to transition towards sustainable finance is a very important balance to strike. So we would circle back to some of the points that Verena has raised later on. Let me now turn to our next panel speaker, who is Octavio. Octavio, I hope you are hearing me clearly, and welcome to the panel. And again, thanks for dialing in at rather late hours on your end. It's still Tuesday in Brazil, I think. Octavio, I think it would be helpful if you can share with the audience here in Hong Kong and also those online your comments on the Latin American situation. Brazil being the largest EME in Latin America, I think, Octavio, you are best placed to share your views on that. And also, if you can cover the policy stance of the Central Bank of Brazil and also your partners in Latin America in terms of the fight against inflation. You guys have been very preemptive in that process. Why are you doing that? What led you to that sort of rather early actions? And finally, if you can also share with us the apparent outperformance of the real, I think that would be helpful. So let me pass the floor to Octavio.
Okay, thank you. Thank you. Good morning for everyone. Here in Brazil is the early time on Wednesday. First of all, I'd like to thank the Hong Kong Monetary Authority, especially my friend Arthur, for inviting me to take part in this Asian Policy Dialogue panel. It is an honor for me to have this great opportunity to share with you my thoughts and some of the Brazilian experience in the macroeconomic and financial policies. My initial remarks I dividing into three parts. In the first part, I will reinforce the importance of solid macroeconomic and prudential foundations combined with a comprehensive macroprudential monitoring framework for emerging markets economies, especially to navigate in times of adverse global conditions. In the second part, I intend to briefly explore the recent experience of the Brazilian monetary policy, which was one of the first to pivot its behavior in early 2021. And finally, in the third part, I intend to talk about the conditioning factors behind the recent behavior of the Brazilian currency, the real. Let's start. The most important lesson we have learned as an emerging market economy over the last few decades is to maintain a solid economic and financial fundamentals, as well as a comprehensive macroprudential monitoring framework in any economic scenario. This is even more important for EMEs in times of adverse global conditions, and especially for EMEs with a high degree of trade and international financial flows. Since the turn of the century, Brazil has established a credible monetary policy regime. It is based on an inflation target model and a float exchange rate regime that serves as a first line of defense against external shocks. In addition, we maintain an adequate level of international reserves that serves as insurance against events of sudden stops of international flows. At the same time, Brazil has built a comprehensive prudential and macroprudential framework following the Basel standards recommendation by the book, keeping the Brazilian financial system well prepared to face the materialization of eventual risks, internal or external. In the same tune, it is worth mentioning the breadth and depth of available TR data enable the Central Bank of Brazil to undertake extensive systemic risk monitoring using a broad range of analytical tools, such as automated early warning indicators, contagion analysis, and top-down macroeconomic stress tests. It is important to highlight that the Brazilian economy has a low level of trade and capital flow dependency, which minimize the impact of external shocks on the domestic economy when compared to other EMEs that are more trade and finance integrated. However, even with a relatively low degree of global integration, the external environment still has a significant influence on our domestic economic and financial conditions. Based on a solid economic and financial fundamentals, as well as comprehensive micro and macro prudential monitoring framework, the Brazilian economy has not experienced major problems in recent years in finance of its external accounts, and it has been navigating waters with relative tranquility, even in the face of some adverse internal and external conditions. Changing to the second part of these remarks, it is well known that the Central Bank of Brazil was one of the first of its peers to start the cycle of tightening financial conditions in early 2021. At the time, we identified strong early signs of demand shock. Until then, monetary policy makers around the world have been solely reacting to supply shocks. Brazil was not the only country to pivot its monetary policy in early 2021. Other important emerging market economies, such as Mexico, also adopted this posture early than almost all advanced economies. EMEs almost always implement policy changes early and more deeply than advanced economies. This happens because EMEs generally have less room for maneuver. Particularly in the case of Brazil, the still clear memory of high inflationary periods and consequently the low level of tolerance for inflation are also factors to be considered in our monetary policy framework. Finally, in the third part of my initial remarks, I want to mention some concerns about the recent behavior of the Brazilian currency, the real. There are some facts that explain the real's performance vis-a-vis its peers, especially in 2022. First, the fact that the Brazilian economy is an important exporter of agricultural and mineral commodities, whose price has risen significantly in recent years. Second, the fact that some important Brazilian exporter companies started to internalize more cash flow in 2022 instead of using it abroad to reduce external debt, which was done in 2021. Third, the fact that the Central Bank of Brazil started adjusting monetary conditions early than advanced economies, making the interest rate differential favorable to the real. And four, a factor that has been acting in the opposite direction to the previous trees is the fiscal uncertainties, especially Brazil public indebted levels. Arthur, this is my initial remarks, and it will be a pleasure to explore other issues in the Q&A. Thank you very much.
Yeah, thank you. Thank you, Octavio. Thanks for sharing your views from a EME perspective. I'm sure those remarks would have very important reference value for our EME friends in Asia. Now we have covered Europe, we have covered the EME perspective. Let me now turn to Hiroto of Bank of Japan to cover the Japanese situation. As a developed markets, Japan seems to be on a very different glide path in some of these issues that we are facing. So it would be helpful, Hiroto, if you can share with us your views on the Japan situation, in particular inflation outlook, as well as Bank of Japan's recent move to widen the band of the 10-year JGB yields targets. It would also be helpful to talk a little bit about Japan's adoption of fintech and in order to help the vulnerable sectors in this kind of environment in gaining access to finance. So let me pass the floor to Hiroto.
Okay, thank you, Arthur. It is an honor to participate in this dialogue. So let me start by talking about the price developments in Japan. So in Japan, the latest CPI inflation for all items, excluding fresh food, increased to 3.7% in November, which is the highest in 40 years. This is mainly caused by a rise in import prices that reflects high commodity prices and the yen's depreciation, and to the resultant pass-through of cost increases. Going forward, the BOJ expects that the CPI inflation will decelerate to below 2% from fiscal 2023 in terms of the fiscal year average, as the impacts of the rising import prices will wane. So price in Japan has risen significantly, although the extent is much smaller than the increase seen in other countries. This seems to highlight Japan's long-standing issue of prices being unlikely to rise. That is, goods prices in Japan have shown cyclical fluctuations along with the output gap, as is the case in Europe and the United States. However, services prices have remained extremely rigid, unlike in Europe and the United States, and have barely risen during the pandemic. So in Japan, 0% anchoring of inflation expectations, in other words, zero inflation norm, has been extremely persistent. Individual firms are facing a situation that although demand declines significantly, with even slight price hikes, small price cuts do not result in that much increase in demand. So this is why keeping prices unchanged has been the optimal price-setting behavior for Japanese firms. However, many firms have passed on cost increases recently. We need to examine whether the change in price-setting behavior will take hold as the new norm. So against this background, the BOJ assumes that we have not reached the point to achieve the 2% price stability target in a sustainable and stable manner. So we will continue with monetary easing and thereby firmly support economic activity to raise wages and to achieve the target. And about the recent policy action the BOJ took in December, BOJ is currently conducting a QQE with yield curve control framework and controls short and long-term interest rates. For the 10-year yield, the target range was plus and minus 25 basis points from 0%. In June last year, we faced strong upward pressure on the 10-year yield, and the upward pressure on yield was understood to be spillover effects coming from upward movements in the US yield curve. Although the upward pressure on yields have waned after summer, price gaps between on-the-run 10-year JGBs and off-the-run 10-year maturity JGBs became persistent. Gaps between swap rates and JGB rates were widening further as well. Such price gaps remain even though the US interest rates came down in November. Since JGB yields are reference rates for corporate bond yields, bank lending rates, and other funding rates, persistent price gaps could have a negative impact on financial conditions such as issuance conditions for corporate bonds. In order to sort out the problem which affected transmission mechanism through bond markets, the BOJ decided to widen the 10-year yield allowance from 25 basis points to 50 basis points. At the same time, the BOJ commitment for a 2% price target clearer, by increasing the total amount of JGB purchases. Just to clarify, this is definitely not a step toward an exit. So very briefly on the financial technology issues, financial services is no longer provided only by face-to-face in physical locations. As consumers will be able to access a variety of businesses without being limited by where they live, they will find it easier to receive the services that best meet their needs. For example, as a decline in Japan's population is anticipated going forward, especially in non-metropolitan areas, there will be a growing need for digital technology as a means of providing financial services in underpopulated areas. Advancement in technology and change in technological trend could be rapid, so it will be necessary for the authorities to follow the trend and be prepared to respond appropriately when the need arises in the future. I will stop here. Thank you very much.
Yeah, thank you, Hiroto, for your remarks. We can come back later to talk about, depending on whether there's any interest on the floor among the audience, to talk about the BOJ policy action. We can actually come back to talk a little bit more about the widening of the target bands later. So now we have literally covered EMEs, DEs, both Europe and Asia, and Latin America. Let me now turn to Dong. Dong, in the IMF, you are in the best position to share with us your overall assessment of the global as well as regional sort of perspective. You have heard the other remarks by the panelists in terms of their take on the major challenges and also the latest developments that they are seeing in the respective regions. So if you can also share with us the IMF latest assessment of the outlook in 2023, what challenges should we be expecting and how do we more effectively deal with those kind of challenges? Depending on whether time allows or permits, there's one particular risk point that I would like to see the IMF's views on. A number of them would like to see the IMF's latest assessment on whether that would have any spillback risk on financial stability for the financial system. So Dong, please.
Thank you, Arthur. It's really a great pleasure to participate in this policy dialogue panel and to speak at the Asian Financial Forum. So let me start with the global outlook. Actually, IMF staff are in the middle of working on an update of our projections. So the final numbers are not in yet. They won't be available until later this month. But we broadly expect the global growth trajectory to be consistent with the October 2022 forecasts back in the annual meetings, during the annual meetings last year. Basically, we see annual growth slowing down in 2023 compared to 2022, before rising again in 2024. Now, this outlook, of course, reflects significant headwinds, as mentioned by previous speakers, such as the synchronized monetary policy tightening by major central banks to fight inflation, Russia's war in Ukraine, and the resurgence of COVID-19 in China. But we see risks to this outlook becoming more balanced. Although significant uncertainties remain, I think we want to emphasize, in general, it is a more shock-prone world. Climate disasters, debt distress, and continued geopolitical tension and fragmentation could bring more shocks. A somewhat surprising development in the past year is that global financial conditions have actually tightened less than one would have expected, given the fast pace of monetary policy tightening. We are happy to see that financial market adjustments have been mostly orderly, and the core financial systems have held up reasonably well. But let me say a few more words on the inflation outlook. as it has been a major theme in policy dialogues. Global inflation remains elevated, but headline inflation has eased somewhat in the United States, the Euro area, and some emerging market economies, especially in Latin America, as mentioned by Deputy Governor of Brazil Central Bank just now. Underlying inflation, as measured by different gauges of core inflation, is showing more persistence than headline inflation, reflecting a combination of pass-through of energy prices, supply chain cost pressures, and the tight labor markets, especially in advanced economies. Now, services inflation has accelerated alongside moderating goods inflation. Incipient wage price spirals remain a risk for the outlook, especially in countries with tighter labor markets. For economies with divergent policy paths vis-à-vis the United States, and for many emerging markets and developing countries, rising dollar strength, notwithstanding recent moderation, has added to inflationary pressures. Overall, we think that inflation will probably moderate to pre-pandemic levels by end of 2024. Although long-term inflation expectations have so far remained fairly stable in most major economies, the inflation outlook is still uncertain, as shocks could delay or reverse the disinflation process. But it's another challenging year for monetary policy. But it's a somewhat different kind of challenge. 2022 was about how quickly to tighten monetary policy and how far to go. For 2023, the question is probably more about how long to stay on hold. And we believe it's important that the central banks stay the course. Turning to the Asia-Pacific region, while still outperforming other regions, Asia is expected to grow this year well below the historical average of 5.5%, 5.5%. Inflation has broadened across most countries except China and probably and Japan, rising above most central banks' targets and requiring a decisive policy response. Slower growth in the region reflects three major headwinds. First, global monetary conditions have tightened as major central banks raise policy rates to tame inflation. Yields rose and exchange rates depreciated across Asia. Second, the war in Ukraine hurts external demand for Asia's exports and could precipitate a trend of fragmentation, darkening growth prospects. Third, the Chinese economy has been undergoing a sharp slowdown, and it could be a bumpy reopening. Risks to the outlook stem from intensification of these three headwinds. 2022 also saw significant portfolio outflows from Asia-Pacific, as Arthur, you yourself mentioned earlier. But broad-based or sustained capital account pressures did not emerge across the region. Outflows from emerging Asia were comparable to previous episodes, such as the 2013 taper tantrum and the 2020 onset of the COVID-19 pandemic. Although outflows from Asia appeared to have stabilized since the last quarter of 2022, we still see some risks in 2023 as interest rate differentials could widen again. So in that context, let me add a few words on the housing markets in Asia Pacific, as Arthur, you asked me to share some thoughts on that. Housing prices surged in the region during the pandemic. The rapid rise in housing prices, especially in Asia's advanced economies, were facilitated by low mortgage rates as the central banks implemented very accommodative policies, along with country-specific demand and supply factors. This led to sizable price misalignment and a marked increase in downside risks to housing prices. Housing price misalignment remains quite high across Asia and the Pacific, although some jurisdictions have recently showed early signs of cooling off. For example, in New Zealand, Hong Kong, and the Philippines, vulnerabilities in Asia's housing market remain elevated, as housing price to rent and housing price to income ratios are still above historical trends in countries such as Australia, New Zealand, Japan, and Korea. The recent monetary tightening in Asia and the Pacific could imply increased downside risk to housing prices. Misalignment in housing prices combined with the rise in mortgage rates suggests a deterioration in housing affordability and a significant risk of price corrections. The housing price at risk is particularly large in advanced economies of Asia Pacific, which reflects higher mortgage credit and household debt in these economies. The risk spillover from housing market to the financial system seems limited at the moment in our view. The financial sectors of major economies in Asia appear sound to the extent that they would be expected to remain resilient even under severe stress testing scenarios that assume a major housing market correction, sharp tightening in monetary conditions, or significant falls in household income. Nonetheless, close supervision is certainly warranted for early identification of pockets of risks. So looking forward to the medium term, very briefly, we think it's important for the global community to guard against geo-economic fragmentation while working towards a more resilient global economy. Certainly, there are very exciting opportunities to explore for efficiency gains, including rapid progress in digital technology, as Arthur, you have asked the panelists to address. Given the time limits, I won't go into details, but we believe that digitalization really could significantly change the organization of financial services, and the rise of central bank digital currencies could usher in a transformation of the international monetary system. So with those remarks, let me stop here, and of course I will be very happy to take questions if we have time. Thank you very much.
Yeah, thank you very much, Dong, for your remarks, for completing really the circle of comments from the panelists, and you have added very nicely the angle from the IMF in your assessment of the risk going forward. Let me now, the audience now have heard from the panelists in terms of the remarks on the way forward. We can now invite questions. Let me invite some quick questions from we only have time for perhaps one or two quick ones from the audience. You can scan the code and go to the Q&A tab and then enter your questions, then click submit, and I will see it on my iPad here. While we are, let me see whether anything has come in. Oh, it's about Asia. I'm not sure who can take that. There is a question about fund flows, currency depreciation, capital outflows. If global interest rate continues to go higher and US dollar continues to be strong, would the panelists expect the currency depreciation against US dollar to continue and then capital outflows to resume in Asia? Maybe IMF, is the IMF concerned about this fund flow situation?
Thank you, Arthur. Thank you for the question. As I mentioned just now in the remarks, capital outflow pressures did emerge last year, and they were of comparable size to earlier episodes of large outflows. But capital account pressures, they were not, widespread or sustained across the region. And financial sectors have been quite resilient in Asia Pacific. So even though we can't rule out, because of higher, widening interest rate differentials again, capital outflows might resume. I think the region is well placed to deal with such pressures, so that is not a major risk that we see at the moment. Thank you.
Thanks, Dong. Another quick one. I think this one can be taken very quickly. The three panelists, you can all answer the following questions. Are you more concerned, for 2023, are you more concerned about geopolitical developments, or are you more concerned about continued monetary tightening? Who wants to come in first? Hiroto?
Yes, thank you. Thank you for the question. Well, I guess you cannot really compare those two risks. Those are really intertwined each other. And geopolitical risks cannot really be handled by central banks' monetary policy in a sense. So central banks will monitor the situation and react to what is necessary as possible. So that is my quick answer. Thank you.
Yeah, thank you, Hiroto. Octavio, which factor would you be more concerned with?
Yes, I think there are some risks we must monitor closely. First, it is eventual persistent high inflation in some major advanced economies, consequently high global interest rates for a long period, as we said before. It is a global risk, not only for Latin America countries, but of course, domestic high inflation is also a relevant risk. The second one, I think, is specific for Latin American countries, a weak demand and low price for some agricultural and mineral commodities. Many Latin American countries has a high dependence on commodity export revenues. In a scenario of low export revenues can impose some domestic restraints. And the third one, there are risks related to country-specific vulnerabilities, notably high public indebtedness. In this case, it is important to build a comprehensive and feasible fiscal framework.
Thank you, Octavio. Don't you have any comments on this one? Which one should we worry more about?
It's certainly an important risk factor to our outlook. I think that's this is a shock-prone world, as I mentioned earlier, and of course we cannot forecast shocks, but that's an important downside risk to the outlook. Thank you.
Okay, thank you very much for all the remarks. I think I've been told that we only have a few minutes left, or 2 minutes left. So let's go to the second round of live votes, posing exactly the same questions, exactly the same two questions as we have put to you before the panel starts. If you haven't done so, scan the QR code, pick the answers, and then submit your votes. Let's deal with the first question. Again, let me repeat. There are 4 choices for you to choose from in terms of the major challenges that we will face in 2023. So let's put the question up now, and let's go to a vote to see whether your views have changed. Okay, let's put the results on screen. It remains largely the same. Remember, last time round, it was 60% for choice number 2 and 29% for choice number 1. And now we have slightly more people voting for monetary tightening and slightly less voting for geopolitical risk. Let's go to the second question. in terms of technology, innovation technology, whether that would bring more benefits than risk to growth. Again, let's have 30 seconds for the vote. Okay, let's show the results on screen. 52 versus 33. Last time round we have 55 versus 32, so largely the same. Okay, so the views of the audience hasn't really changed much after the panel discussion. So I think we have come to the end of this panel discussions. Let me thank all the panelists for your valuable contributions to the discussions and for your very enlightening remarks in terms of the challenges that we're going to face going forward in 2023. Let's give the panelists a big hand as a note of thanks to them. So this brings us to the end of the session, and let me pass the floor back to Karen.
Thank you very much, Arthur. Let's have a round of applause for Arthur, who moderated that panel so well. Thank you so much, Arthur. So, ladies and gentlemen, coming up next is our exclusive keynote luncheon with Mr. Ban Ki-moon, the 8th Secretary General of the United Nations. And the luncheon will be moderated by Mr. Ronnie Chan, Chair of Hang Lung Properties Limited. That will start very soon. So if you are an invited guest to that luncheon, please proceed to meeting room N201. You can go now with your e-invitation, and you can follow the directional signs that we've set up, and also our staff will help you get to that venue. If you're not joining us there, don't worry, you won't miss out. The live feed of the session will be broadcast at The Vision, which is in Hall 5E, and it's also available to watch on the AFF virtual platform. So for those attendees who aren't joining the keynote luncheon, don't forget to redeem your complimentary AFF meal voucher sponsored by China International Capital Corporation, and you can get the voucher at the Hall 5E information counter. You can use it at designated convention center premises, including the dedicated AFF concession at Hall 5E and other outlets. Just before you go, you can leave behind any SI headsets on your seats if you've used them, and don't forget to take all your personal belongings. So enjoy lunch, whether you're joining the keynote or you're going to watch it, the live stream, and we'll be back here for the panel discussion on the global economic outlook at 2:15 p.m. Thank you. Hello again, ladies and gentlemen. Welcome back. Good afternoon. I hope you got some lunch and have been enjoying the AFF so far. Our afternoon sessions will begin soon. Before we do that, I'm just going to go through some of the other things that are happening outside the conference rooms during the AFF. In case you didn't join us first thing in the morning, you may not know about some of these other things that are going on. So our FinTech Showcase is back, and the idea is for leading financial institutions and technology companies to present their latest innovations and cutting-edge solutions. They've got presentations and information on AI, on blockchain, on cybersecurity, insurtech, payment technology, regtech, and wealth tech. And this is complemented by the Innoventure Salon, which opened at 10:30 today, both online and offline. And here, investors can identify over 40 high-potential startup projects, and budding entrepreneurs can get information and advice on project commercialization, as well as pitch their ideas. Regulators and market facilitators in Hong Kong, as well as some experienced innovators, will be sharing practical tips at the Startup Advisory Face-to-Face with startups and entrepreneurs. And we also have experts sharing their insights during fireside chats. And they're going to cover topics like GBA opportunities, NFT and digital collectibles, venture capital outlook, regtech innovation, and more. So if you have time, you should head over to the Innoventure Salon to check that out. Co-organized by the Financial Services and the Treasury Bureau, the Hong Kong Trade Development Council, and Invest Hong Kong, and with the support of Cyberport and the Hong Kong Science and Technology Parks, the FinTech HK Startup Salon, which is under the umbrella of the Innoventure Salon, is being held in Hall 5C. And that features next-generation business ideas from over 50 fintech startups from Australia, mainland China, Hong Kong, Israel, Italy, Korea, Saudi Arabia, Singapore, and Thailand. So if you're interested, please do go to Hall 5C and check out the FinTech HK Startup Salon. The Global Investment Zone, which is in Hall 5C, is going to showcase investment projects, also covering a very wide range of sectors. And the AFF deal flow matchmaking sessions will take place throughout these 2 days to connect sources of funds with sources of deals. This takes place at Hall 5E, and this year's deal flow will feature over 300 investors and 500 projects covering various sectors, including digital tech, the environment and clean energy, financial technology, healthcare technology, as well as infrastructure and real estate. So deal flow is always very popular. There is also a virtual extension of the matchmaking session. So if you can't make it in person, you can continue to attend those matchmaking sessions online through our AFF virtual platform up until the 17th of January. So the other things that are going on today, the fireside chat on Hong Kong as the focal point of the GBA Startup Roadmap, as well as onboarding the world to NFTs and digital collectibles, will be held this afternoon at Hall 5C, while the Global Spectrum session on FinTech Unlimited, Everywhere, Everyone, Everything, sounds like an Oscar-winning movie, and Investing in Healthcare for an Equitable Future will be held at Hall 5E. Plenty of choices depending on which session you'd like to go to. Also, if you can't go to one session, don't forget that you will be able to go on the virtual platform and watch the recordings of all the panels and all the sessions. So we hope you're enjoying your day. We hope this helps you plan the rest of your day. Coming up here very shortly in Inspiration Hall, we have the panel discussion on the global economic outlook, and that's due to start already. We're running a little bit late with our speakers there. And at 4:30, a panel discussion on Asia-led multilateralism. So if you're coming into the room, please feel free to come in and take a seat, and I will be back with you once we're ready to start our first discussion this afternoon. Thank you. Hello again, everybody. Welcome back. Just a quick reminder of what's going to be taking place in this room this afternoon. In a few moments, we will kickstart our panel discussion on the global economic outlook. And later this afternoon at 4:30, we'll have a panel discussion on Asia-led multilateralism. Two other panel discussions will be held concurrently at the Pulse at Hall 5E. One is on inclusive asset and wealth management landscape, and the other, insurance innovation, unlocking business potential in the post-pandemic new normal. This session will be conducted in English, so if you do need any simultaneous interpretation, the headsets are available at the counter just outside the room here. And if you need Putonghua, it will be on channel 2. And for our online participants, you can select the volume button on the screen to switch between the channels. If you have any questions for our speakers, you can scan the QR code on the screen and select the Q&A tab and enter your questions. That's for our in-person participants here. You can enter the questions and click submit. And if you're joining us online, the tab for questions is also on the screen. Just select Q&A, enter your questions, and click submit. We also may have some interactive live voting. Some of you may have done that this morning. Again, you use the same QR code and click the voting button, choose your answers, and click submit. So now we know how to interact. It's time for us to begin the panel discussion on the global economic outlook. Ladies and gentlemen, please give a warm welcome to our panel chair, Mr. Victor Chu, Chairman and CEO of First Eastern Investment Group, and our distinguished panel of speakers as they come to the stage. And I'd like to invite you all to the stage. Please give everyone a warm welcome.
Good afternoon, ladies and gentlemen, distinguished speakers, distinguished guests, and all our friends around the world who's joining us online on this wonderful occasion that we are resuming an in-person major conference in Hong Kong. As we talk about coming to hopefully the end of the peak of our pandemic, and we're beginning to recover from 3+ years of very brutal lockdown, we have to remember that such recovery that we are experiencing is still at a fairly early stage, and the world is still encountering enormous challenges, as Secretary General Ban Ki-moon mentioned in his keynote speech. We have the challenges of energy, food, supply chain disruption, geopolitics, and also our huge challenges on climate. And here in Hong Kong, I'm very happy to say to our international friends visiting us that we have not laid idle in the last 3 years. We have tried to use this down period to make policies to broaden our economic, industrial, and financial base. Look at our airport. A lot of work has been done, and a lot of innovation has already been implemented, and I hope we'll all be able to see that Hong Kong is renewing our confidence, our enthusiasm, and our commitment with humility to learn from friends around the world how we can best survive and renew our energy in this new period. There will be a lot of experience to share, and I think all of us need to work hard to make sure that together we are able to rebuild a resilient, sustainable economy and financial system for the benefit of not only ourselves, but regionally and internationally, and for our future generations. Today, we have really a most eminent panel from the major economies around the world to talk about economic outlook, and I will initially ask each of them to address us quickly about their view from their region, and then we'll go on to some interactive discussions. So thank you very much for joining us. Valerie, can we start with you to ask you to say a few words from, you run one of the largest asset managers in the world, and from Europe, how do you see the economic outlook?
Well, thank you very much, Victor. Well, first of all, I would like to say that I'm absolutely thrilled to be here, back in Hong Kong, and to share that with you, as we are, of course, managing 2 trillion around the world. Sharing our vision about the outlook is extremely precious, of course, for me. Speaking about 2023, I think that there will be 3 factors which will determine the global outlook. The first one is the central bank's policy, of course, with the inflation which starts to decrease. The second one, the energy crisis and the way the European governments will go on managing them. And the third one is, of course, the Chinese opening and the rhythm of this reopening, which will be very important for the global growth. So at the global level, right now, early January, we still expect, of course, stagnation, considering the global situation. And we also expect that inflation will remain high, probably something like 6% for 2023. And our economists think that the global growth will be around 2.2% for 2023. Maybe one word about the regional levels, because of course the situation will not be the same according to where we are. For the US, we consider that there is a very significant growth for a recession, hopefully a short one. Inflation, of course, will decelerate, but we remain above its target, we're pretty sure. Europe, as you were mentioning, we of course expect the GDP to contract by 0.5%. Considering the situation, and we expect a recession, once again, hopefully short in Q1 and Q2. Asia, it will all be about the rhythm of reopening, of course, considering the fact that all this takes time and that we have this new year arriving. We do not expect any significant growth before the second quarter. But our economists think that it will be around 4.5% in 2023. So in a nutshell, a challenging year again, or a challenging start of the year for sure. But if the inflation is contained, the central banks are going on, the governments in Europe are going on also, managing properly the energy crisis, the end of the year should be better.
Let's really hope so. Bob, a great investor and a great philanthropist in art, culture, youth, and minority rights. Let's have your view from America.
Sure, thank you, Victor. And again, thank you all for welcoming all of us back to Hong Kong. I know I can speak for our panelists here that it's exciting to be back and part of this wonderful economy and being so warmly greeted as we usually are. So thank you all for that, and excited to be back here for this forum. From our perspective, I have the great privilege of working with enterprise software companies. You know, we operate in 180 countries. We have about 350 million users of our software in over 70 industries. And not surprisingly, you know, we're not immune to the economic challenges that the world is facing, but we are dampened from it quite considerably. And I'll give you some statistics. Our portfolio exists with about 86 software companies, a little over $23 billion in revenue. And at the peak of the end of the first quarter last year, our bookings growth across that platform was on the order of 29%. percent. When I look at it now in the flash numbers for the end of this year, it is close to high teens, low 20s% on the flash numbers. So what that tells you is there is a deceleration of the consumption of enterprise software, business software. Consumer software, a lot more severe in the context of inflation has hit the consumers much more aggressively. But in the business software context, there's still a massive consumption on a relative basis, principally because of the productivity that software brings to its customers. We still measure every year what the average return on investment is for software that we sell to our customers, and it's still over 600%. 600% ROI for the products that we sell to our customers. That's leading to consumptive dynamic. If you have wage inflation challenges in almost any businesses, typically enterprise software is one of the ways to offset that. If you're looking to, expand into market areas without expanding, sales and marketing effectively or making your salespeople more effective, buying more software is typically one of the answers to do that. So in our world of enterprise software, while the valuations have come down, in many cases not necessarily justified by the consumption of the software, we still see demand for these products globally. We have collectively now distributed computing power, connected that computing power to almost all corners of the world, and that computing power is now being used effectively to drive productivity and effectively to decrease costs and frankly increase standards of living used in a business context. In terms of, and I agree with Valerie in terms of what our sense is in what is occurring globally in specific markets, U.S. market seems to be dampened, but does not seem to be actually moving into recession territory from what we can tell. Forward purchases have pulled back, but yet there are still renewal rates in our businesses that are on par with where they've been in the past. We think Europe in particular, UK in particular, there is a much more dramatic slowdown, and so we're actually seeing in some cases a decrease in the purchasing of B2B2C software. But the enterprise businesses typically are now figuring out ways to utilize it to offset some of the wage challenges that they have. And Asia is interesting. In some places we're seeing peaks and expansion. In some cases we're seeing a dampening. But it is clear that most of the businesses and customers that we have are realizing they need to continue to invest in productivity tools and continue to invest in the expansion of those productivity tools across their enterprise. So on a relative basis, an optimistic place to be an investor today.
Great. Thank you, Bob. And Dr. Rita, who runs the Indonesian Sovereign Wealth Fund and a great friend of Hong Kong, ASEAN has the highest GDP growth last year. And what's the view from ASEAN?
Thank you, Victor, and very, very good to be here for someone who lived in Hong Kong for many, many years. It's really, really accelerating, I guess, to see Hong Kong back in business. Indonesia is about 60% of ASEAN, more than 60% of its population. So the drive of ASEAN overall is partly influenced by Indonesia, which actually has recorded over 10 quarters of trade balance surpluses as well as credit, as well as current account surpluses, driven by the localization or downstreaming of a lot of our commodities. On the back, of course, on a huge population. So ASEAN, in my view, is poised to potentially grow even faster. I like to see that the world is, to me, seeing 2023 looks a lot more optimistically for a number of reasons. One is, I think we have seen what we call a polycrisis, crisis in war, crisis in commodities, inflation, all those good stuff. So I think the humankind is a lot more ready for 2023. So that's number one. Number two, I think a lot of pundits, in my humble opinion, have not taken fully the coming back of China out of the COVID lockdown. That's number two. Number three, the efficiencies that Robert touches a bit a lot on his previous speech, as well as a number of things that we have seen. Because we were in such a dire situations in the last few years, we became so much more agile. Part of our panels are not here today, but yet we still can go on. So we become so much more adaptable to more efficiency. And we actually could deliver a lot more with a lot less. So I have a lot more positive view about the outlook than a lot of our peers. Not to mention, given the fact that I'm a rabbit, rabbit also says that this is the year of peace and prosperity, and rabbit likes to run. So to me, I think 2023, what more can we do? We got so much things in 2022. Let's face 2023 with a bang and with positive. So thank you.
Great, thank you. Well, we are all quite optimistic here in Hong Kong. Let's go to Beijing with Dr. Gu, Chairman of the Agricultural Bank of China, one of the largest banks in China and indeed in the world. Dr. Gu, China is now reopening and is capturing the world's interest and attention. Tell us a little bit about the view from China.
Thank you, Victor. Good afternoon, everyone. Greetings from Beijing. My appreciation goes to the Hong Kong Trade Development Council for the invitation. It's a privilege to join you virtually. I would like to share some of my views on the global and the Chinese economy. The world economy is facing multiple challenges, but it is in better shape compared to that of last year. We have experienced sluggish trade and investment, high inflation, and disrupted global supply chains. This year, downward pressure remains, but we believe inflation in major economies will start to come down. Growth rate may not be fast, but still in positive territory. On the upside, we see opportunities coming from green transition and digitization. We call for our countries to make concerted efforts to normalize the global economy. Chinese economy also faces some headwinds. The first issue is housing market. Due to the impact of COVID, it weakened to some extent, and some developers suffered losses. The second issue is export. Affected by weakened external demand, China's export fluctuated over the past several months. And the third issue is investment. It was fueled mainly by public sector last year. A healthy economy needs more balanced composition of investors. Now let's move to the prospect of Chinese economy. China's recent Central Economic Work Conference clearly states two priorities: confidence and domestic demand. The first priority, confidence, is frequently stressed at a conference. It provides the basis for promoting development across different sectors, such as consumption, housing market, investment from private sector, and overseas entities. The encouraging policies and measures issued recently will help regain confidence and lay solid ground for China's economy to grow as a whole. The latest data from our branches support such a forecast. For example, mortgage loans extended by ABC have picked up since last December. The second priority is to expand domestic demand. Consumption accounts for 2/3 of China's GDP. Household consumption is surely a key factor. In addition, our ongoing efforts to upgrade China's industry system will further promote the domestic demand. In summary, China will strive to accelerate economic recovery in 2023 and will begin to achieve faster growth in the second quarter. ABC, we will work closely with our peers from the financial community to contribute to the recovery, which would help brighten the global economic prospect. Finally, I wish the forum a great success. Thank you.
Thank you very much, Dr. Good. Very, very encouraging news and comments. Let's now go to Mr. Konibi, Chairman of SMBC and Chairman of Sumitomo Mitsui Financial Group. Japan is now at a very interesting stage with inflation finally exceeding the 2% target. Konibi-san, please let us have your wisdom about what's your view of the global economy from the view of Japan.
Okay, thank you very much, Mr. Victor Chu. Thank you for inviting me to the Asian Financial Forum. Sumitomo Mitsui Financial Group is one of the 3 largest banking groups in Japan, and our main subsidiary is Sumitomo Mitsui Banking Corporation. We operate in more than 40 countries, and our Hong Kong branch just celebrated its 60th anniversary last December. And also, I also co-chair the plenary sessions of the Hong Kong Japan and the Japan-Hong Kong Business Cooperation Committees, which are hosted by the Hong Kong Trade Development Council and Japan's Keidanren. Mr. Victor Chu is a member of the Hong Kong-based committee, and I have had several discussions with him. First, I would like to share with you my view of the global economy. The global economy is expected to experience a downturn this year as a result of continued interest rate hikes in the US and Europe aimed at curbing inflation. The depth of the economic slowdown depends on how fast each country can control inflation. In the US, inflation appears to be peaking out, but if we take a close look, we can see a shift from cost-push inflation centered on the price of goods backed by supply-side constraints to demand pull inflation centered on the price of services backed by rising wages. As rising wages can also be seen in Europe, the US trend appears to be spreading to the rest of the world. Given these circumstances, I personally feel that the view of an early victory against inflation is somewhat optimistic. Given that supply-side constraints are being resolved, we do not anticipate a serious situation such as stagflation, but we do expect inflation and policy rates to remain high and the global economy to slow down to a certain degree. Next, I will talk about the Japanese economy. The Japanese economy, given that it reopened later from COVID-19 compared to the West, is expected to grow at a steadier pace than the economies of the US and Europe. However, high growth rate is unlikely due to sluggish external demand, which is hampered by the slowdown in the US and Europe. Japan's inflation rate reached a 40-year high last year, backed by the weak yen and rising natural resource prices. However, the Bank of Japan expects inflation to fall below 2% this year. I believe if wage hikes can boost consumer spending and encourage companies to pass on rising costs to consumers, a positive cycle for growth and moderate inflation can be achieved in Japan. Thank you very much.
Thank you so much, Konibi-san. Much appreciated. And also thank you for your leadership of the Japan-Hong Kong Economic Cooperation Committee. We want to engage more to further cement the bilateral relations under your leadership. Thank you.
Yeah. Thank you.
Now, may I ask our good friend Mark Tucker, Chairman of HSBC Holdings. HSBC is the world's global bank, but in Hong Kong is also Hong Kong's local bank. So, Mark, please give us your views from London.
Victor, thank you very much, and good afternoon, ladies and gentlemen. Taking part in the AFF is always a very good way to start the year, and I'm delighted to join you virtually, actually from New York, not London, but even more delighted with the reopening that's taken place, which will enable, in my view and in our view, Hong Kong to remain and grow as one of the world's great financial centers. Making a few brief observations on the global economy. Over the last few years, I think countries around the world have been responding to the challenges of COVID-19, having been impacted for the most part in similar ways. Some countries faced higher levels of infection than others at different times, and governments chose to implement different policy responses. But they all had to deal with the social and public health issues of the pandemic, as well as the economic fallout. And we've seen this including volatility in markets, supply chain disruption, pressure on small and medium-sized businesses, the impact of changing consumer behaviors and rising unemployment. And of course, for the last year, also dealing with the impact of the war in Ukraine, which is having both a tragic human cost and an economic impact on energy supply and on commodity and food prices. However, as we go into 2023, the economic challenges that countries face are now very different, and there's consequently a much more uneven outlook. I think, as has been said by the panelists to date and Dr. Gu, particularly China's reopening announcement and package of measures to stabilize the property market will be positive for both its economy and for the global economy, albeit with some volatility and challenges due to the jump in number of COVID-19 cases. Hong Kong and the entire Greater Bay Area are likely to be immediate beneficiaries from the mainland's opening, and I expect to see a strong recovery from Q2 onwards. Again, as has been mentioned, overall Asia has proven resilient, and I think there's a prospect of a strong rebound later in the year. We've seen virtually all economies in the region now recovered from the output losses incurred during the pandemic and are above 2019 levels, and this is hugely welcome. I also expect the Middle East to continue to perform well this year on the back of a strong 2022 and the important reforms underway across the region. And through the lens of our clients, we see strong and growing demand to connect customers in the Middle East with Asia's economies and vice versa. In contrast, the UK faces challenges from high inflation driven in part by higher energy prices and the war in Ukraine, both of which are contributing to a cost of living crisis and increasing pay demands. A recession is widely expected. In continental Europe, the war's caused energy supply issues. The ongoing squeeze on real incomes means that, again, recession is likely across most of the region, though I expect a modest recovery in the second half of the year. The US economy proving more resilient than those in Europe, and I don't expect a hard landing, although the Fed, I think, appears to be indicating that the US is not quite at peak inflation. Another rate hike is coming next month. But I expect any US recession to be much shallower than those in Europe. Finally, I think all of this means I'm more optimistic about the second half of 2023. I expect inflation to slowly come under control. The markets are certainly hoping that rates peak in the first half of the year so that any recession is shallow, regionally limited and resolved quickly. But I think we need to be careful here with false dawns, and history shows that for inflation to come down, we may need to see a deeper recession caused by higher rates. Or indeed recession fears may just dominate, and there's a risk that rates peak too low or too early, and therefore inflation will persist for longer. And this is a fundamental challenge that policymakers around the world must navigate. That said, I believe that mainland China's reopening will be a significant boost to the global economy, and above all else, potentially the stimulus on which the outlook for 2023 depends.
Thank you very much, Mark. It is quite late for you in New York, so thank you so much for staying up early for us. Jose, are you calling in from London, or are you in somewhere else?
I am calling in from London.
London, great. Well, since Mark is not in London, maybe we can ask you to tell us your views from London.
Well, thank you very much, Victor. And let me also thank the organizers, the Hong Kong government and the Hong Kong Trade and Development Council for their kind invitation to join you again, this time virtually, in this amazing event. And I'm going to speak about how I see the global outlook. I think that the situation in the UK, just to say something on that, is quite difficult. The UK has been hit by a number of shocks, some of them which have to do with external shocks, and some of them which have been generated inside of the UK. And I think that the cost of living squeeze is quite impactful. So I foresee a complicated 2023, both from the point of view of inflation, but also most significantly from the point of view of growth, with a number of important societal issues which will have to be resolved over time, and that cannot be done as quickly as I think government would like. Shifting now to the world, I think 2023 is going to be a year marked by some important contrasts, and I would like to focus on three of them. The first one has to do with inflation and with growth. The past year, 2022, was a year where the focus was squarely on inflation. Inflation, I think, surprised on the upside everywhere in the world, particularly in the United States and Europe, for reasons having to do with higher demand in the United States and in Europe, particularly with the energy crisis. So we had a difficult situation which led in the West to higher inflation, to higher interest rates on the part of central banks, and this is something which was exported to the rest of the world and which took a toll in terms of growth, in addition to other factors like those emanating from the Ukrainian war. So the poly-crisis that was referred to before, I think, has been the key in 2022. 2023, I think that the emphasis is going to be much more on the deceleration of growth. Last year it was, everybody was focusing on inflation. I think that inflation, if central banks, as I expect, continue to keep the guard high and continue to maintain appropriate monetary policies, inflation will calm down, and therefore the focus would be much more on the deceleration of growth. And it is a fact that all forecasters are envisaging a significant deceleration of growth in the world. That doesn't mean it has to be everywhere, and I will comment on that in a moment. But I think that's going to be the big focus this year, with inflation peaking and coming down, and growth slowing down quite significantly, particularly, I would say, in the United States and in Europe. So that's the first contrast. The second is that I see the current year as a year in two halves. And the first half is going to be much more complicated. And the second half, I think, is going to lead to a significant recovery. In the first half, many of the consequences of the public crisis are going to remain with us. So I expect that, as other speakers have mentioned, that the United States will get into some sort of technical recession. Hopefully, the recession would be short-lived and shallow. In the euro area, I think that things may get a little bit more complicated, as in the UK. So I foresee a recession which may be a little bit deeper. The first year will still be very much affected by the negative drivers that were in place last year. But I see a very different second half. I think that this is going to be helped very much by the opening up of China, which will have a positive impact already from the second quarter. But that's going to be felt more significantly in the rest of the world in the second half. And as inflation has peaked, I think that we would not expect higher interest rates in the second half of the year. And this is something which is also going to be a relief. So again, a year in two halves, with the second significantly better than the first, paving the way to a better 2024. And the third contrast is one between what's going to happen in advanced economies and in emerging markets. And I think that overall emerging markets are going to do better than advanced economies, and particularly Asia is going to be leading global growth once more. The reopening of China very significantly is going to contribute to Asian growth, but also other economies in the region, like we've talked about ASEAN, also India. There is going to be a different engines of growth, both in Northern Asia and Southern Asia, which is going to, again, make Asia be, and emerging Asia in particular, be the top contributor of global economic growth. Emerging Asia has been contributing last year to nearly 30% of global growth, and I expect this to be a higher contribution in the current year. Of course, there are risks, and risks are tilted to the downside overall in the world, but I remain positive that the second half is going to leave us in a much better place. And again, I think that the role of China is going to be vital, and Hong Kong is going to benefit a lot from that. And again, Hong Kong, with its amazing resilience and vitality, I think is going to contribute to spreading that growth coming from China and playing an important part in the recovery of Asia, and thus helping also the global community.
Thank you very much, Jose. Thank you so much for a very comprehensive response to our question. Now, we've heard all the experts on our panel about their view of the global economic outlook. We'd like to hear your view, and we'd like to have a quick live voting. The question is, what is your outlook for the global economy in 2023? 1, optimistic, 2, neutral, and 3, pessimistic. And please go ahead to vote and let us have the benefit of your views. Okay. Can everybody see it? I think most of you are neutral. Very interesting. Very, very interesting indeed. So we are almost equal in terms of optimistic and pessimistic, and the largest pool is neutral. Thank you so much for your views. We will continue with our discussion here. We have 4 or 5 thematic issues that we'd like to discuss amongst our experts on the panel. And I want to pose the first question to Mark, Rita, and Jose. The question is, what's the role of the financial sector in mending the global economy in the face of interest rate hikes and geopolitical tensions? Will there be any foreseeable shift in Asia or in the other regions' role as the major geoeconomic influencer? So, Mark, can you kick off with this?
Yeah, Victor, happy to. I mean, I think everyone's got a role to play in driving recovery and growth, be they governments, regulators, central banks, multilateral development banks, businesses, and of course, as you say, financial institutions. And when I think about the role of financial institutions, it's really twofold. Firstly, we help to meet the needs of today's world. And secondly, we invest and innovate to help create and build the economies of the future. And the needs of today have become very apparent because of the challenges that we face. And the simple fact is we must not ignore the here and now because of the scale of those issues. For banks like HSBC, this means stepping up our support for clients across sectors and regions as they navigate the challenges we've discussed. And we have an important role to play in working with regulators globally to ensure compliance with the many regulatory regimes in the markets in which we operate, and again, supporting our clients as they do the same. Having said that, we also need to keep this one eye on the long term, and financial institutions here have a critical role to play, whether that's the insurance industry using its ability to invest over the long term to support the building of the new infrastructure we need, or banks like HSBC working with its clients to develop climate transition plans that set out their visions for the next 20 to 30 years, and then providing them with the finance they need to turn those visions into reality.
Great.
On the second part of your question, it won't come as a big surprise to you that I do not anticipate a foreseeable shift in Asia's prominent role within the global economy. The demographic challenges taking place, the accumulation of wealth due to the rapid growth of the middle class, urbanization, the shift to consumption, monumental improvements in connectivity, both physical and digitally. These are the fundamentals that have made Asia attractive and which will continue for many years. And it's important to reiterate that Asia is now not just a story about Hong Kong and mainland China, as attractive as they both are in their own right. India is a hugely attractive market with a strong long-term outlook, supported by the demographic dividend provided by having over 2/3 of its population of working age, plus important reforms and rapid developments in the digital economy, coupled with global supply chain shifts and per capita GDP reaching $3,000 in the near term. This is a basis, or could be a basis, for a 20 to 30-year runway for growth, as was the case for China in the 1990s. And the same is also still true of Singapore and across many ASEAN markets more generally. GDP growth in Vietnam of 8% in 2022 is one of the fastest growing economies, not only in Asia, but across the globe. So Asia's growth potential is much too great for the world to ignore, and I don't expect it to.
Great. Rita?
Okay. I hope what I'm about to say is not too controversial, but I look at financial sector roles in two parts. One is for agent of payments, and 2 is for agent of development. Now, on agent of payments, financial sector as intermediaries, taking money in, transfer money out, that has been progressing quite well, and technology plays a huge role in that one. On the agent of development part, I think financial sector needs to do a heck of a lot more. I was guilty because I was banker most of my life as well, but part of the principle of bankers are as follows. One is, let's lend money to people who doesn't need money. Don't lend money to people who cannot pay back, because just lend, that's one dichotomy. The second thing is, let's make sure financial sector lends on the risk-adjusted returns. While it's nice in concept, it's like if somebody has a marginal risk, let's make sure we charge them super high, so we actually cover not just the risk, but also our margins and expenses and stuff like that. As a result of that, you can actually see that the rich getting richer and the poor getting poorer, and the people that actually don't have access to capital getting even much more shrink. Now, for the countries even more so. I came from Indonesia, who's only part of the process of building our infrastructure. To build a toll road in Sumatra, for example, which is the second most populated island in Indonesia, to find money to invest in Sumatra is much more difficult and much more costly than to find money to make the Autobahn in Germany more shiny. And that's actually just part of the ways as to why financial sector, I think, has to be relooked again for the better of the development of humankind, so that it can be even better. And I think one of the key things is regulation has to be looked into. The government decisions on the real sector has to come a lot more in sync with the development in the financial sector. That's probably what I can say.
Yeah, and also in terms of Asian infrastructural financing, we've been talking for the last 30 years about Asian bond market. It hasn't gone very far, for all sorts of reasons. Is something that one really need to look into it more deeply. But Jose, can you share your views on this question, please?
Thank you, Victor. I think that the first thing that one should ask about the financial sector, the banking sector in particular, is to be a source of strength and stability, unlike what happened during the global financial crisis, where the banking sector was the source of problems. And I think that it is now well established that the major international banks are a source of strength and stability, but also in most countries, the domestic banking system has made tremendous progress and again has reached a position of strength, not everywhere, but in most places. So I think that this is the first thing that one should ask. The role of the banking sector, the financial sector, is critical in financing growth and sustainable development. And this is particularly important at a time when the fiscal constraints on the public sector are very significant worldwide, and particularly in emerging markets. So I think that it is an important responsibility, but also an important opportunity for the banking sector, and particularly for global banks, to play a role in cross-border capital flows to supply the amount of capital, infrastructure capital, sustainable capital, which is necessary for emerging economies to achieve sustainable growth. And this is something that should be done in partnership with multilateral organizations through public-private partnerships. But I think that it is the private sector that needs to play a very important role, because the amount of funding that the private sector can allocate is significantly more than what the public sector can provide. But the public sector, the multilaterals, can act as an accelerant of this private sector financing. Second, regarding the role of Asia, as I mentioned before, Asia has made very significant contributions to global growth in the past. If we look at the decade preceding the pandemic, emerging markets, emerging Asia contributed about 45% of global growth during that decade. And that's an amazing contribution. As I mentioned before, last year, the contribution was in the high 30s. And I would expect that going forward, Asia would have an even higher contribution to global growth based on all the sources of strength coming from a region which is very dynamic, very diverse, and very innovative. And as I said before, now you have multiple sources of growth in Asia over the medium term, not just in Northern Asia, but also in Southern Asia. So again, I'm very bullish about the role of Asia, and I think it will become even, a more and more important region in the global economy and in trade.
Thank you, Jose. Now, I'm going to ask our panel to look into the crystal ball. Do we expect the high interest rate and tight monetary policy environment to go away anytime soon? How does the financial sector respond to such landscape? So I will start with Dr. Gu in Beijing. Dr. Gu, please.
Yes, thank you. Yeah, I share the view from other panelists that right now, the US is facing lighter inflationary pressure. And in the Eurozone, the pressure is also expected to peak sometimes later this year. So the need to continue raising interest rates weakened. We estimate that in 2023, the pace of interest rate hikes will slow down. However, with rising food prices and the shortage in labor supply, the current high interest rates and tight monetary policy are likely to stay for some time. China's situation, China's monetary policy is, however, a different story. We will continue to maintain the prudent monetary policy, and a less aggressive Fed policy can expand PBOC's room for more flexibility. Under such complex situation, so my suggestions to the commercial banks are threefold. First of all, be market sensitive. Stay forward-looking to the policy movement by major central banks, and stay alert to market risks from volatility of commodity prices and interest rates. Secondly, be prudent. The reason is that on the corporate side, high interest rates and a slowing economy can result in lower earnings and rising default risks. And the third, be proactive. Timely adjust our business strategies. Seize opportunities in areas such as green transition. Seek new engines for growth. Thank you.
Thank you, Dr. Gu. Valerie?
Well, considering the situation today, we at Amundi expect major central banks to keep hiking policy rates and reducing their balance sheets, at least for the first half of the year, because they still have to monitor their target, and the fact that inflation be back to 2% in 2 years remain a target for a number of central banks. So for the US, we believe that the Federal Reserve will raise rates above 5%. And in Europe, with an inflation at above 10%, the ECB has no other choice to go on raising policy rates above, probably above 3%, for sure. Coming to the second part of your question, which was how does the financial sector respond to this landscape? I would like to say that what we advise to investors right now is, first of all, to maintain diversified portfolios, because this is the only way to manage the situation. And of course, also actively manage their duration risk. This is incredibly important right now. On the other hand, bond valuations become attractive. It hadn't been the case for a long time, so it's an opportunity for investors. But one point I would like to stress is about liquidity. I think we all need to adapt to a world where central banks' liquidity will be less abundant in the future. So the disconnection we saw in the past between the valuation of the companies and the real figures of the companies will disappear. So we might still see some market repricing in the future, because the cost of borrowing has become very important. And financial institutions and banks, in particular, have, of course, to be very careful to both liquidity squeeze and, of course, to defaults in such an environment, once again, at least for the first half of the year.
Thank you very much, Valerie. Kunibi-san, let me ask you to give us your view. Now, obviously, Japan is exception in this general question, because the question for Japan is, when is Japan going to end the low interest rate environment? But let's have your view about the global landscape first, please.
Okay. Thank you, Victor. As mentioned earlier, whether the high interest rates will be peaked off depends on the success or failure of inflation to decline. But I personally do not believe that inflation will necessarily decline anytime soon. In the base scenario, inflation is expected to decline in about a year as wages and resource prices settle down, and the pace of interest rate hikes will slow down accordingly. However, as the FRB sees inflation returning to below 2% in 2025, there is a chance that inflation will remain high for the time being due to wage increases and consumption boost. In the medium to long term, taking account of geopolitics and energy supply issues, it will be also unlikely to return to an era of low inflation and interest rate again. With a high degree of uncertainty about the future, senior management of the financial institutions should assume a scenario in which inflation is more prolonged than the market outlook and prepare countermeasures. In addition, we should also prepare for market turmoil due to monetary policy changes, which market participants do not expect. Thank you.
Thank you. Bob, our friend Jamie Dimon said yesterday that he thinks interest rate will go up to 6%. What do you think?
It's hard to bet against him, but I will tell you, I think the challenges that we face in America are going to create a conundrum for our Fed and, frankly, for our Congress ultimately, because there's an inextricable link with inflation with our immigration policy. It is, in my mind, clear that the U.S. will be able to get inflation for energy and for durable goods under control. It is unclear for food and for wages. Our wage inflation dynamic is a function of our immigration policy. We are not allowing a robust H-1B visa program. We are not allowing immigrants who have provided the safety valve of wage inflation for America for decades. And as a result of that, even though you're seeing layoffs in certain segments, we are still in a shortage, a labor shortage, and that labor shortage is going to continue to exacerbate until we have comprehensive policies that expand our citizenry. And that is something that needs to be addressed by the U.S. Congress. and by the executive branch in a way that will create a sustainable new economy for Americans. I frankly think that the UK has a similar conundrum in that the decisions they took around Brexit has actually created some labor challenges there, which is creating some wage challenges, and it's going to be difficult for them to compete globally unless they really come towards creating more productivity in their economy. So the offset, of course, to all of these inflationary challenges is productivity. And, we will be beneficiaries, of course, as investors in software. But I think overall the conundrum will be second half of this year, third quarter of this year, when we will see commodity prices in certain areas come down, but wage inflation not. And that's what's going to create a challenge for the Fed as to what decisions and what actions they're going to take. And I think, stay tuned in second half, and second half of this year as to, how the policymakers and how the politicians ultimately will address that issue.
Bob, we in Hong Kong are very sensitive to those policies because our dollar is pegged to the US dollar. So we have surrendered our interest rate policy to you guys. So we hope the best will happen in the United States.
We do as well. And again, I think the business community is bringing forth efforts to engage with our government to help them understand that we have labor challenges and labor shortages that cannot be solved without effective, comprehensive immigration policies at the high end in terms of productivity, and we've got shortages of probably 2.5 million jobs for software developers, et cetera, and for laborers to provide labor for everything from in the agricultural segments to the services segments, and that's where the challenges are. Those segments can offset some through technology and use of software, but in many cases you actually have to have bodies to do the work. And if you don't have them, then those who are there doing it are going to demand higher wages, more benefits, and that's something that is sticky from an inflationary perspective.
Great. Thank you so much, Bob. Great. Now, let's go to another set of questions, which is quite interesting. Now, assuming we are still having a rising interest rate environment and tight monetary policy, at least in the short term, how do emerging economies finance recovery incurred by the pandemic whilst preparing for tightening monetary policy? I'd like to start with Jose, please, and then followed by Dr. Rita and Bob again, please. Jose, please.
Thank you, Victor. Emerging markets have been hit by the pandemic more than advanced economies. And within emerging markets, the low-income countries have been hit even further. So I think that the situation there has not been great as a start. And then we have the higher interest rates in the United States and the high dollar also leading to challenges in emerging markets. And therefore, the tightening of monetary policies in emerging markets is natural, not only as a result of defending yourself against the imported inflation, but also in terms of avoiding significant capital outflows that might create big problems to emerging markets. I think that emerging markets need to navigate skillfully the narrow path which is defined by the need to resume growth with the tightening of monetary policy and also with a relatively low fiscal space or no fiscal space that many emerging markets have. And that brings me back to the need to put in place the measures to stimulate private investments, because that is critical for the recovery of emerging markets in the current situation. And for that, I think that as we saw after the UK experiment a few months ago, financial markets at a time when liquidity is less abundant are much less tolerant of heterodox experiments in economic policy. And therefore, having the appropriate monetary policies, to avoid significant currency depreciations and capital outflows, to have prudent fiscal policies and maintaining policies geared to financial stability is going to be critical for investors, both domestic and international investors, and for investment to resume in these countries. The rule of law, the quality of institutions is also paramount. So putting in place or strengthening those things which are linked to the attractiveness of the country, both to domestic investors and to international investors, is absolutely critical. And of course, that means that emerging markets will be able to maintain market access and get the financing they need. There may be some countries which get into trouble, and we have already seen some emerging markets getting into trouble with debt defaults or debt distress, and of course they will need to go to the IMF and the World Bank for help, and they would work with these institutions to put in place the right economic policies so that they can regain market access over time. But I think that for the majority of emerging markets, it is maintaining market access which is critical.
Thank you. Jose. Rita?
Yeah, you can't paint the emerging market with one broad brush, because there are certain emerging markets that are blessed with a number of things, such as large domestic market, which is not so influenced by the global trade. Those that actually have natural resources that actually are enjoying the commodity boom that we're experiencing today. However, many emerging markets are not blessed by those. You know, they don't have natural resources, number one. They actually are suffered when the US are contracting by increasing rates. You can actually see in a lot of emerging markets, money actually flowing out in droves. So the US are actually okay, but the rest of the world are not okay, especially in emerging markets. So I would think that for those that are less blessed with such factors, as I mentioned before, they have to focus a lot on a number of things. For example, focus on what they have. Like, for example, domestic market liberalizations, increasing their competencies. I'm sorry, Bob, I kept referring to you. You talk a lot about centers of excellence and developing, you know, the brain power or the high tech or whatever. So emerging markets has to dig deep into what they have, because the world is not as kind as it used to be. That's the reason why Indonesia, for example, on the G20 took a big, bold statement to say the world will be so much better if the developed nations and the developing nations work together, and the developing nations agenda is just being paid attention as much as it is on the developed nations. In the sense, the developed nations can actually export expertise in technology, or if they talk about renewable energies, for example, why don't assist the developing nations with renewable energy technology right on the get-go, because some of the emerging markets don't even have electricities. So I think it takes the whole world to kind of think through. Otherwise, the emerging market will continue to suffer more. They themselves have to do things differently and harder, but the developed nation might also play a role in terms of helping out.
Thank you. Bob? Right, and I think, Rita, thank you for really framing this issue. You can't paint them all with the same brush. And one of the things that came out of the pandemic is that many nations decided to invest in infrastructure to, A, identify their citizenry, B, enable them in some cases to provide benefits and opportunity to the citizenry with payments. What that actually did was gave them the ability to now deliver capital to individuals, capital to small businesses that they couldn't do before. And it was going to take 10 years, but the pandemic accelerated that. So there's now digital infrastructure in certain of these emerging markets that create an opportunity to now invest in small to medium businesses, startups, which is the vast majority of emerging markets. Their business economy starts with a small business. And the small micro lending, that kind of capacity is what actually generates ultimately a higher standing of living and productivity. Then you look at some of the larger markets like India, okay? Now you think about it, they have now digitized almost 1 billion people that they now have access to, ability to reach, and digital cards. That creates a massive opportunity to now bring capital, resources, insights, training, all those sorts of things, financial literacy, which will continue to accelerate their ability to become and emerge as leaders in the global economy. So from our perspective, you know, the thing to look at is which ones have made the investments in their citizenry, which ones are building centers of excellence. And it is clear that the countries that invest in the development of their citizenry, providing broadband access, education, financial literacy, all those sorts of tools, micro lending, are the ones that are going to be in much better condition, you know, 5 years, 8 years, and 10 years from now, because you've created a sustainable resource, the people. And I think that's what we're going to see. One of the challenges that came out of it, you do have some economies that said, oh, we like the free money, and we're no longer going to be productive. And I think that's going to be one of the counterbalances that has to be addressed, because that's where you're going to see capital flight, and that's where you're going to see a lack of investment in business infrastructure, because politicians got comfortable delivering capital to a broader group of citizenry without that citizenry doing work to earn it. You know, of course, we had to solve some of these problems during COVID, but now it's a time where we have to get those citizens to be productive again, and that's going to be some of the challenges in certain emerging markets.
Yeah, absolutely. Even in Hong Kong, Bob, the pandemic has forced every single business in Hong Kong, however small, to become online e-commerce, digital business. Fascinating, you know. Fascinating. Yeah. So great. Let's go to another very, very interesting topic, and that's to do with the economic implication of population aging and low fertility rate in the coming decade. So what are the economic implications of population aging and low fertility rate in the coming decade? How may the sector innovate to cope with these challenges? And when we talk about population aging and low fertility, of course, we all look to Japan for wisdom or guidance, because Japan is the leading country who has to face with this huge structural challenge for some time. So, Kunibi-san, could you share with us some experience and ideas in Japan how to manage this trend, please?
Okay, thank you, Victor. The population began to decline in 2008. Needless to say, demographics is one of the key factors for economic growth. And it is a major obstacle that Japan must overcome in order to achieve sustainable economic growth. Many Asian countries will also eventually face the same challenges as Japan over the next decade. It is not easy to reverse this demographic trend, and there is no single innovation that can solve the issue of declining birth rate and aging population all at once. It is necessary to consistently execute multiple initiatives that address a range of matters. I personally believe there are 4 important points based on Japan's experience. First, proactive measures should be taken based on conservative population forecast. In Japan, measures are based on optimistic population forecast, and therefore, we are constantly needing to make adjustments. Proactive measures should also reduce the cost of dealing with issues. Second, diversity should be promoted to compensate for the shrinking labor force. In response to the decline in the working population, Japan is promoting women's employment and raising the retirement age and success to raise the working population even as the population declines. In the future, immigration may be an item for consideration. Third, DX and the investments in human resources should be promoted to increase labor productivity. In order to achieve economic growth amid the shrinking workforce, labor productivity must be increased by actively investing in human resources, as well as promoting DX. Finally, we need to better develop new industries, especially through fostering startups, in order to increase capital productivity in an aging society to a certain extent. Younger, more innovative corporates must replace older, more traditional corporates. Startups can create new industries through innovation. In Japan, these issues are being addressed under Prime Minister Kishida's new form of capitalism strategy. Although it will not happen overnight, there may be room for collaboration with other Asian countries, which will face similar challenges in the future. Thank you.
Thank you so much, Konebi-san. Dr. Gu, China is now following Japan in terms of population aging. Can you give us some perspectives from Beijing?
I'd like to. Before we dive into the topics of population, maybe let us review first the key drivers of economic growth. The best estimate of one country's potential growth rate, the growth rate of one country's, I think that it is not only decided by the population growth rate, but also decided by its growth rate of technology advancement. So we can see that nowadays aging population is a common challenge for both developed and developing countries, including Japan and China. According to the latest population census, China's population growth rate further dropped. Such a trend will inevitably lead to declining of labor supplies, which will impact the economies negatively. However, let's not forget the role of technology. Labor replacement tech will significantly boost productivity and effectively mitigate the labor shortage caused by aging population. On the second part of your question, to cope with the challenges, the financial sector, we could seek innovation from the following two aspects. One is to increase financial support for technology-driven companies, especially tech innovation projects in AI and the next generation IT. Secondly, we could adopt fintech developments to streamline workflows, increasing operational efficiency, so that we can better preparing ourselves to cope with the labor shortage. Thank you.
Thank you very much, Dr. Gu. One of the related questions on population aging, of course, is the rise of dementia. And we won't have time to look into this important subject now, but I can't help but giving this a plug that we will have the Global Health Summit in Hong Kong in May. And of course, the question of dementia and its implication will be at large. And please join us, whether in person or virtually, on that important summit. And you'll find details in the TDC website. Ladies and gentlemen, we're coming to the end, the final question in this session. As I mentioned in my opening, Hong Kong, as we prepare for the relaunch and the reopening, we are very willing to share experience and learn from our colleagues around the world on some of the best practices so that we can mitigate the risks and also catch up with the reopening with renewed enthusiasm, passion, confidence, and yet with extreme humility. And since we have a very eminent panel here, I'd like to ask each of you to say a few words about what lessons, from these global challenges we faced in the last, 3 years, that we might look at as the essentials to rebuild a resilient and a sustainable society going forward. Because at the end of the day, that's the name of the game. So could I start with Valerie? Yeah.
With pleasure. Thank you very much. I think there are three essentials actually for building an inclusive and resilient economy. The first one is to work on a just energy transition. As a European, considering the energy crisis we have today and considering the climate change we have in front of us, we all know that we now need to work on ensuring a cheap and clean energy by building, of course, energy infrastructures around the world. It has to be, when I mean it has to be just, it means that it has to be done at the right pace to make sure that this is not leading to any strong social issues. The second one, second essential, is probably to better balance the labor share and versus the capital share. Once again, it's a question of making sure that what we are building together is a question of sustainability. And the last one, I'm sure, Victor, you will agree on that, is go on working very much on international cooperation. Because geopolitical tensions will go on arising, but it is absolutely essential that they do not undermine trade, investments, and corporate outlook if we want to build, once again, an inclusive and resilient economy. Just to conclude, at Amundi, this is in our DNA. We say our raison d'être is to work every day in favor of our clients and society, because we believe the wealth and the power we have needs to be useful for the society. So we will go on working on all these topics by being a responsible investor in the future, not only in Europe, of course, but in Asia as well.
Bravo. Thank you very much indeed. Bob?
I will say the big lessons we learned through this time was, citizenry, people need access to opportunity. And opportunity comes in many forms. First and foremost, it's often opportunity and access to education and the ability to educate themselves, their children, to pursue, the elements that bring them joy in their lives, whatever that might be, that's part of an orderly society. The second is access to capital to enable those dreams. And in many cases, the backbone of almost every economy is the small business. And those small businesses need access to capital. They need access to often small amounts of capital and training and utilization of that capital and financial literacy and running their businesses and making sure that it's effective. And then lastly, which is one of the things we saw that inflamed America, is access to justice. And there was the time of the murder of George Floyd tipped the scales in America because many Americans didn't feel that there was an equitable justice system being applied. And so those are some of the lessons that we all, as in many cases financiers, as policymakers, need to think about in building sustainable infrastructure going forward for the economies and the communities that we care about and that we live in.
Fantastic. Bob, I'd like to further discuss this with you during the Investors Governor Group at Davos.
Yeah, happy to. We'll do that.
Jose, please.
Thank you. Three things. The first is that, in recent years, we have been facing global challenges, and global challenges need global responses. So I join Valerie in the need for international cooperation, both across countries, but also between the private and the public sector. I think that this collaboration across these two fronts is critical. So that's number one. Number two, I think that you have to build resilience when you can. And in banks, for example, in good times, we had to make sure that we build our buffers so that when bad times hit, we are ready and we're resilient. And the global financial crisis led to reforms and changes in behavior that have made banks very resilient to further crisis. I think we need to extend that, not only to the rest of the economy, but also more broadly in society, so that society can take big hits and withstand them better. And the third theme is the role of innovation and technology. And again, there, the collaboration between the private sector and the public sector is critical. And I'll just give two examples. During COVID, innovation has been critical to develop the vaccines that have saved the world. And also in terms of the energy crisis, innovation and investment in new technologies for new source of energy will be critical in solving the energy crisis. So that would be my third. Thank you.
Thank you, Jose. Dr. Gu, please.
Yes. In year 2015, China's government officially brought to the public the new concept of development, namely innovation, coordination, green, openness, and sharing. I think they are perfectly in line with the essentials for building an inclusive and a resilient economy. Thank you.
Thank you, Dr. Gu. Dr. Rida?
Yeah, I think a lot has been said before. Three things that I think strikes me, at least personally. One is about humanities. We could be greedy, we could be aggressive, we could be expansionary, like in the war, for example, but we also extremely resilient. We also extremely resourceful. So one factor on humanity is something that we should cherish and treasure. Number two, on the energy, as Valerie also mentioned, and a number of panelists as well. Energy and climate change is here for real. It's not something that we could just say a lip surface. And I think sustainability, the whole focus on environment, I think it is not a trend. It is actually something that must be in every CEO's and everybody's mind. This is real. If we don't save this environment, we will be at our own peril, so to speak. And thirdly, if I can quote Ban Ki-moon this morning about the fact that a lot of government officials are smart yet egoistic because they actually tend to focus on their own country, their own interest. Well, guess what? Bad news is technology and internet actually makes us even more interdependent, even more collaborative. So let's embrace that, because we actually, do need to collaborate more, do need to cooperate more. So, those are the three things that I took home with me during this crisis. Thank you.
He talked about global citizenship. And let's go to one of the most global citizens, Mark Tucker. Mark, you're still awake in New York.
I am. Thanks, Victor. It's in its simplest form. I think to me the key lesson is just connectivity, and that means effectively, in short, we are stronger together. And certainly, I believe and I feel I know from some 40 years of work that we have far more to gain by continuing to work together and continuing to strengthen the ties that bind us, while making a concerted effort to avoid erecting barriers that serve only to make our people and our firms poorer. And if you take the three most important economies in the world, China, the US, and Europe, these huge and influential economies are more interlinked and interdependent than ever before. And these links are forged by many millions of activities of people on a daily basis in trade, investment, science, education, and the arts. and the most extensive links of all are in supply chains and manufacturing. But I think it's a consistent theme with what the panelists have said, connectivity and trying to ensure that we are stronger together.
Thank you very much, Mark, and thank you for joining us so late. Kunabi-san, you have the last word, please.
Okay, thank you. The global economic and business environment is difficult to foresee due to the situations, pandemic, geopolitical tensions, supply chain constraints, and turmoil in financial markets. In building an inclusive and resilient economy in such an unstable environment, I think there are two major roles that the financial institutions should play. The first is contribution to solving social issues. The world is now facing global social issues such as food, energy, and environmental problems, and financial supports are essential to solve them. It is important for Asian countries and the financial institutions to work together to solve social issues as friends who share the same issues. The second is improving the resilience of the financial system. With the anticipated unwinding of liquidity due to global interest rate hikes amid uncertain economic outlook, the possibility of materializing financial risks in the future cannot be ruled out. Financial institutions must maintain a resilient financial infrastructure to support the economic activities of their customers, no matter what the environmental changes may occur. To this end, it is important for financial institutions themselves to enhance their resilience and keep an eye out for signs of a crisis. In order for Asian countries which have high potential but also face challenges to achieve growth, Asian financial institutions which support the real economy must play an extremely important role. Thank you very much.
Thank you very much, Kunibi-san. Ladies and gentlemen, I'm very pleased that we have a very rich discussion. We touch on many subjects, and it's nice to end with a cautiously optimistic and hopeful note. And I'd like to thank our panelists here and also online for the wonderful contribution. And we look forward to seeing you in May, if possible, for the Global Health Summit, and definitely next year back at AFF. Thank you very much, everybody. Travel safe and have a happy and healthy Year of the Rabbit. Thank you.
Thank you.
Thank you very much.
And thank you very much, Mr. Chu, for chairing that panel. Can I ask our in-person panelists to come to the front of the stage for a group photo before you leave? Ladies and gentlemen, while they're taking the photo, just a couple of notes for you. In case you've missed any of the other panel discussions or sessions that you couldn't go to, or you'd like to revisit them, be sure to check out the videos on demand, which are on the AFF virtual event platform. We are going to take a short break for about 30 minutes. Please feel free to go out and meet our exhibitors in their booths. You can find out more to learn about the latest technologies and services they're providing and explore collaboration opportunities. Also, feel free to drop by the Business Lounge, which is at Hall 5E Concourse, for a cup of coffee before you come back into the final sessions of the afternoon. We also have some lovely entertainment for you after coffee. If you visit the Fireside Chat venue, you can enjoy a musical program performed by Mosaic, which is an a cappella group formed by students from the University of Hong Kong. Our next round of discussions will start in about 30 minutes with the one on Asia-led multilateralism taking place here in Inspiration Hall, and the one on insurance innovation, unlocking business potential in the post-pandemic new normal, taking place at the Pulse at Hall 5E. So if you're coming back for Asia-led multilateralism, we'll see you back here in 30 minutes. Thank you very much. Hello again, ladies and gentlemen. There we are. My mic is up now. Welcome back. I hope you've had a chance to take a break and to get some coffee or tea. And our next session, which will be on Asia multilateralism, is going to begin shortly. So if you are joining us for that session, please make your way back into Inspiration Hall and take a seat. It's really the last discussion that will be happening in this room for today. There's a lot to see at the AFF this year. If you've had time to visit the exhibitions, that's great. If not, I'll just tell you a bit about some of the choices that you have. We have the fintech showcase, leading financial institutions and technology companies showcasing their latest innovations and cutting-edge solutions in a range of things: AI, blockchain, cybersecurity, insurtech, payment technology, regtech, and wealth tech. And the fintech showcase is complemented by the InnoVenture Salon, which is running both online and offline. Investors can learn about over 40 high-potential startup projects. Entrepreneurs can get information and advice on project commercialization as well as pitch their ideas. And regulators and market facilitators, along with experienced innovators, will share practical tips at the Startup Advisory face-to-face with startups and entrepreneurs. In addition, we have experts sharing their insights during various fireside chats, covering everything from GBA opportunities, NFT and digital collectibles, venture capital outlook, regtech innovation, and more. Co-organized by the Financial Services and the Treasury Bureau, the Hong Kong Trade Development Council, and Invest Hong Kong, and with the support of Cyberport and the Hong Kong Science and Technology Parks, the FinTech HK Startup Salon, which is under the umbrella of the InnoVenture Salon, takes place in Hall 5C. There you can learn about next-generation business ideas from over 50 fintech startups from Australia, mainland China, Hong Kong, Israel, Italy, Korea, Saudi Arabia, Singapore, and Thailand. So do head over to the FinTech Hong Kong Startup Salon. And then we have the Global Investment Zone, which is in Hall 5C, and that's showcasing investment projects covering a wide range of sectors. And of course, the AFF Deal Flow Matchmaking Session, which I just walked past, it's quite busy there. It's going to take place throughout these 2 days, connecting sources of funds with sources of deals. Head over to Hall 5E. This year's deal flow will feature over 300 investors and 500 projects. They cover various sectors, including digital tech, environment and clean energy, financial technology, healthcare technology, as well as infrastructure and real estate. And there's also a virtual extension of that deal flow matchmaking session, so that will continue to provide investors and project owners opportunities to meet virtually until the 17th of January, and you can access that on the AFF virtual platform. So we'll shortly be starting the panel discussion here, which is on Asia-led multilateralism. And just a reminder that this session will be conducted in English. If you need simultaneous interpretation, you can pick up a headset right outside the theatre entrance, and you'll find English on Channel 1, Putonghua on Channel 2. And for our online participants, you can just select the volume button on the screen to switch between languages and your channels. Also, as we've been doing in previous discussions, you can ask questions to our speakers. All you need to do is scan the QR code on the screen, select the Q&A tab, enter your question, and click Submit. You can use the same QR code for our interactive live voting during some of the sessions. You just need to click the voting button and then choose your answers and click Submit. And for our online participants, you can select the Q&A tab on the screen and enter your questions. clicking submit there, and during a voting session, select the voting tab to choose your answers. So we have a great discussion coming up on Asia-led multilateralism with a very interesting panel. So if you are joining us for that, please come into Inspiration Hall and take a seat. Well, at least we're back on time. Welcome back, everyone. Thank you for joining us this afternoon. I hope you've had a very productive and interesting day, and it's going to continue to be that way right now. We've got a fantastic panel joining us, so let's start our panel discussion on Asia-led multilateralism. So I'd like to invite Mr. Anthony Leung, Group Chairman of Nanfang Group, and our panelists to the stage. Please come up onto the stage and please give them a very warm welcome.
Good afternoon, everybody. It's a pleasure to chair this panel. And the panel is on Asia-led multilateralism. As we all know, the threat of trade protection is on the rise. And among many other factors, there are at least two that will be somehow causing this to happen. The first one, obviously, is the Ukraine-Russia military conflict, followed by a lot of sanctions on Russia. And this clearly will have implication on trade and investment. Clearly, the elephant in the room also is the US-China rivalry, which unfortunately may persist for some time. And as a result, we are seeing that the world is turning into, as somebody would call it, one world, two systems. So very much like Hong Kong, one country, two systems. The world may be facing a one world, two systems, and that is one system being the US, European net system, and then the rest of the world. Now, as we all know, when the market is being divided, call it one world, two systems, or multipolar world, the aggregate demand will be reduced. So it's not very good for the world's economy. But on the other hand, we all know that there are many global issues that need closer cooperation among countries. This morning, we have heard a lot of these global issues, such as the climate change, dealing with pandemics, other health issues, poverty around the world, particularly in the emerging world, very uneven distribution of wealth, both within and outside each countries. And clearly the issue of growth, as I said, when aggregate demand is being reduced by a more fragmented world, we are not going to see higher growth. So against the world of growing trade protectionism, and yet there are many issues that need cooperation among countries. Luckily, in Asia, we are seeing that there is a rise of multilateralism. We are seeing the inauguration of the RCEP. It marked not just the beginning of the largest trade agreement in the world, with more than 30% of the world's population, trade and GDP. But more importantly, it is a major success for multilateralism against the threat of trade protectionism. So in this session, we have a very distinguished panelist, a panel with distinguished leaders, and they will share the insights on how all these developments, particularly on this Asia-led multilateralism, will impact on the macro side, particularly on the supply chain, industrial, business, capital markets landscapes in Asia. But also, I'm sure we are here to listen to them on how their respective institutions, their organizations, can capitalize on the opportunities presented in the region, including in the technological, in the innovation area, sustainability, and obviously in their respective industries. So I'm going to ask each of the panelists to kind of talk about how they see all these trends and the opportunities that they are facing. And I'll follow basically the list given to me and as presented. First of all, can I invite Nicholas? Nicholas Agustin is the Chief Executive Officer of Hong Kong Exchange and Clearing Limited. Now, you all have their detailed bios, so I'm not going to introduce them in detail. But first of all, Nicholas, please.
Thank you very much, Anthony, and great to be here at this financial forum. And I'm going to focus a bit more on the capital market side because, I mean, that's clearly the area where we have a lot more participation, and clearly it's a very important part for the development of infrastructure, economic development, etc. So when thinking about the last few decades, clearly the trade of services and goods has created a lot of benefits for humanity and societies all around the world. And we're seeing that kind of stagnating. I haven't seen it like go down, but it has been stagnating. So when we look at multilateralism, there is a little bit of a halt that we're seeing in that growth that we're seeing in globalization before. Now, on the capital market side, it's a little bit different in the sense that the markets initially were very, very globalized. And we saw a little bit of a halt, but the opportunities are really, really big, and especially in our part of the world. And when we look at capital markets, Asia, for example, when we look at last year, represented about 2/3 of all IPOs that occurred globally. 2/3 of the funds raised around the world came from Asia. So it's a very significant part. And within Asia, clearly, China has a very, very prominent role. And we have to look forward and look at the outlook. And it's hard to say whether, the next year is going to be a super year or it's going to be in like 2, 3, 4, 5 years. But what I can say is that some of the elements around capital markets will provide opportunity for really decades to come. And there are two components to that. Number one, Chinese capital markets, which today are about $30 trillion, will have a significant growth in the next decade. I mean, our own estimations are that they will be over $100 trillion. Some of that will be as a result of reallocation of assets. Today, the savings for Chinese investors mostly are directly towards real estate and towards bank deposits. A lot of that will be recirculated in capital markets. And then the overall size of the markets as a percentage of GDP is still pretty low, whether it's equity capital markets or debt capital markets. So it's very easy to think that that will triple in the next decade. On top of that, what we are going to see is an incredible flow of money cross-border. Because if you look at total assets under management globally, today, if I exclude domestic capital markets of China, it's over $100 trillion, and a little over 1% is allocated to China today. So the opportunity to continue pouring capital into China is gigantic, really, really big. Now, on the other hand, Chinese domestic investments and savings in international assets, it's also tiny. Less than 5% of the total amount of capital market investments from domestic investors is directed internationally. So there's also a huge opportunity to create that cross-border flow. And just like we were talking about multilateralism and flow of goods and services, the amount of value for our society generated by this cross-border flow is really, really significant. So I'm very optimistic about the future because of the value that can be created from this thing that I call the Big Bang of finance that will take place over the next 10 years. So it gives me a lot of optimism.
Wonderful. It's a very happy note. Thank you. That's a very happy start. Next, can I call upon Jackie Chen, Regional Chief Executive and Group Chief Distribution Officer of AIA, to give his remarks. Thank you, Jackie.
Thank you, Anthony. Good afternoon. I'm really delighted to be here with this distinguished panel to talk about our view on this Asia multilateral approach. In fact, AIA just focus on Asia. AIA Group, we can trace our roots for almost more than 100 years ago, originating from Shanghai, mainland China. And for Hong Kong, AIA Group was listed in Hong Kong, and we take Hong Kong as our home, and we are very proud of it. AIA has been operating in Hong Kong for over 90 years. I just call an example of a close collaboration across the market in Asia, where AIA operating in the last 2-3 years, due to the challenge of various kind of social distancing restriction requirement due to the pandemic in different kind of stages. We do see a lot of learning and collaboration across our market operating company in Asia. We know that Asia market in different stages. And say, for example, in terms of the deployment of a technology solution to help our agents, our customers, and to continue to access to our service, etc. We quickly deploy technology developed in some markets, say, for example, in mainland China, very quick in digital adoption, and for example, in some other digitalization in some Asia market, they come up very quickly. We are able to share, and this ensure a synergy across our Asia market, so that all our customers, our agents, our business partners can leverage on the various kind of technology. I would say, we do see that this really fare quite well. So I want to say that the collaboration across the various stage of the Asia market, I see this is a big opportunity, and we can learn really from each other. Now back to Hong Kong. I'm sure all of us are very excited about the border reopening between mainland China and Hong Kong, and I would say that Hong Kong is really in a very sweet spot now. Although, the external environment, there are all kinds of challenges. I'm sure, the panelists may mention about, and Anthony also talked about certain challenges. But in the case of Hong Kong, because of, the welcome back of our mainland Chinese customer, business, people, etc., I'm sure Hong Kong is in a much better shape for 2023 and going forward. So, thank you.
Well, thank you, Jackie. Clearly, with their long history in Asia, they know how to navigate and navigate well in this fast-growing and large market. Next, can I ask Sam Chin, who is the former Group CEO of OCBC Bank and Ampac Management Limited, to give his remarks. Sam.
Thank you, Anthony. It's really a great pleasure to be invited to this panel with our fellow speakers. So thank you for inviting me. I'm the only one who currently do not have a full-time job. So I'm a freelancer, so I do not have to promote any particular companies that I currently work for. Let me first start off by commenting on the topic that is chosen for today, Asia-led multilateralism. I like the topic because it's Asia-led. With respect to multilateralism, I think it is a realistic topic, but there's also a sad connotation to it. The sad connotation indicates that perhaps globalization has reached its limitation. And the reason for globalization to have reached its limitation, to me, is probably due to the excessive exploration and exploitation of globalization. That cost efficiency was the major purpose for doing globalization, rather than globalization in the sense of utilizing underutilized resources. And towards the latter days of globalization, it has been weaponized, which I don't think was the original intention of globalization. So, whereas I'm happy to see multilateralism starting, and I'm happy to see that this is Asia-led, my wishful thinking is that the globalization in its original intended form will be able to resume, at least to a larger extent, of what it was when it was first created. Coming back to the issue of economic landscape that we currently see and the regional opportunities, I would not be commenting on the economic forecast because in the previous session, in many of the talks, there are a lot of experts who already covered this particular area. I just want to point out maybe 3 macro trends which is relevant to the current economic landscape, and I'll talk about the regional opportunities that will arise from that. First macro trend is, of course, the current slowdown of China and our expectation of the recovery of China and the strong rebound of China. Along with the strong rebound of China, I believe that there will be capital liberalization, there will be further flows, there will be creation of flows that we have not seen before, particularly within the region that we have now formed a multilateral agreement, such as the RCEP. The second macro trend, which is relevant to our creation of new services, relates to the changing consumer behavior. The consumer behavior is now really looking for what I would call constant and instant gratification. They wanted to have something which is most efficiently delivered to them in a better way and in a faster way. And we, as supplier of services, should really make sure that we understand that this instant gratification of the consumers will never go away, and we really have to work on that. The third macro trend that's happening is, of course, technology. I think technology will continue to drive changes in behavior, in communication, in social interaction, and in influence. And we should continue to make use of technology to see how we can achieve the 2 macro trends that I just mentioned, China's recovery, rebound, and opening up, as well as the behavioral changes of the consumers. With respect to the opportunities that arose from them, I would classify them into 3 areas as well. One is the increased capital flow, trade flow, people flow, and in particular, human capital and intellectual capital flow. I think these flows will significantly increase as a result of a successful implementation of country-to-country, country-to-countries agreement, and we need to capitalize on that. The second opportunity is I would call informational services. And by informational services, I mean education, culture, online messaging. I think informational services will have a big demand going forward. And remember, the second macro trend is insatiable consumer demand for instant gratification. We continue to make sure that we are able to deliver informational services. The third, I think, is wealth-being services. And this includes medical, entertainment, tourism, enjoyment. And as we are able to implement multilateral agreements, I think we will be able to make use of technology to have things created in one place that is able to be exported to the other place. So those are the three trends that I just shared with you, and I think along with that, the three services that we should focus on.
Well, thank you, Sam. The very systematically presenting ideas that we can really work on, particularly on the three areas of opportunity arising from the increase in multilateralism in Asia. And we'll have follow-up questions when we have the discussion amongst ourselves and with the audience. Can I ask Levin? Levin is the CEO of Huatai Financial Holdings Limited. They are one of the fastest rising Chinese security companies in Hong Kong. So Levin, can you share your views, please?
Thanks, Anthony. I'm very happy to sit down with so many guests and friends to discuss Asia's economy. We have heard quite a bit about Asia's challenges from guest speakers this morning, but I want to share some optimism by discussing some opportunities in the post-pandemic era. Many of you may remember the economic boom in Asia late last century. Hong Kong is one of the 4 Asian tigers. Now, several decades later, we are witnessing the renaissance of Asia's economic miracle. If we only use 3 words to describe Asia's economy, that will be diversity, complementarity, and multilateralism. Economies in the Asia-Pacific region are at different stages of development. We have developed economic powerhouses like Japan and Korea, giants like China and India, and rising stars like Vietnam and Thailand, just name a few. Yet, each country can be complementary in production, consumption, trade, and so on. The strength of Asia's growth lies in its cooperation-based integration. I believe the story of Asia's economy can be told in 3 M's. The first M is Made in Asia. We are all very familiar with Made in China. The tag reflects China's rise over the past decades. But as China upgrades its industrial proficiency, continued investment from China is likely to flow to and empower neighboring economies. RCEP's low tariffs, easier market access, and other benefits will help transform and bolster Asia's supply chain and illuminate the Made in Asia brand globally. This is the supply side story. The second M is middle class. This correlates to the demand side. Benefiting from supply chain integration, a growing middle class will arise from Asia. According to the World Economic Forum, Asia-Pacific will account for 68% of the world middle class in 2030. They are well-educated and hold large purchasing power. That means 2/3 of middle class will be in Asia. This brings us to the third M, management of wealth. As Asians become richer, the management of their wealth has become a blue ocean market. According to some research, the number of millionaires across Asia is set to double in a decade to 76 million by 2030. This is where we, as the investment bank in the financial industry, contribute and share creativity. That's my input. Thank you.
Well, thank you, Levin, for proposing the 3 M's. Now, lastly but not least, we have a speaker online, and we have the President of Bank of China, Mr. Liu Jin. So can I ask Liu Hangzhang to give his remarks?
Thank you, Mr. Liang, for your kind invitation and having me at today's forum. As we know, Asia is one of the world's most thriving economies today, and RCEP is going to take Asia to another boost. It will make economic integration a more reachable target in Asia, and it will further raise Asia's position in global industrial chains. There are basically 3 things to support my belief in RCEP. One is better rules for doing business in the region. The second is wider market access. The third is more transparent, fair, and predictable policy environment. For financial institutions like Bank of China, RCEP will bring fresh opportunities. First, RCEP will eliminate tariffs on 90% of goods traded within this bloc, provide preferential tariffs for the remaining, and significantly streamline customs procedures. Needless to say, there will be a new round of boom in trade, which leads to a greater demand for cross-border financial services. This is where we at Bank of China and our peers in this region will come into play. Second, RCEP adopts negative lists and a ratchet clause for cross-border investment, making it much easier for capital, technology, and other factors of production to flow among the member countries. Financial institutions will be of dramatic assistance to the member states in complementing each other in economic structure and optimizing the region's industrial chain, supply chain, and value chain. Furthermore, RCEP will drive the financial service sector itself to be more open and active towards new possibilities. It has introduced provisions on new financial services, which will help financial institutions to expand overseas and develop their global expertise, of course, in this region. Last but not least, a larger harmonized regional market and advancements in technologies are good for innovation and efficiency of financial institutions. For example, the unified e-commerce rules will push for paperless trade, e-authentication, and e-signatures, and provide a common ground for storage and cross-border transfer of data. This will further facilitate financial institutions to better serve cross-border e-commerce and other new forms of trade. To take full advantage of these new opportunities and promote the economic progression and integration of the region, there are at least 3 things that financial institutions should do. First, diverting more resources to trade services to offer more cross-border settlement and financing solutions, with a particular focus on e-commerce and the use of CBDC and local currencies. Second, supporting regional industrial cooperation and help build a supply chain financial ecosystem. Third, delivering financial innovation. There are 2 areas I think hold great promise. One is digital capabilities. We have seen a wider spread of, and we expect more, digital tools and practices in Asia. The other is green finance. Financial institutions like Bank of China have the chance and the responsibility to help Asia's green transition by inserting more green products and services. That's my observations. And at the beginning of today's session, Mr. Liang shared with us a brief but in-depth description of the current world situation and gave us a new idea of one world, two systems. To quote Hong Kong Exchange's soundbite in their advertisement, trade Asia in Asia. Let's talk about Asia in Asia. Thank you.
Thank you, Liu Hangzhang. Very insightful. Clearly, from your and other speakers' remarks, we have heard plenty of opportunities in Asia under this rise of multilateralism. Now, clearly, we have also heard Sam talking about globalization having reached its limitations, and his hope that going forward it will resume globalization, but on the other hand, that can somehow result in a better world. So my first question really is, amidst all this optimism, how can institutions in Asia, working with each other, somehow can resolve one of the so-called existential problems that one of the speakers talked about this morning, and that's climate change? How can we work together, particularly since all of the speakers are from the financial sector, improve the world's kind of basically kind of protect the environment or somehow improve on the climate change side? If I may first ask Nicholas and then secondly ask Liu Hangzhang, because he also talked about green finance. What are the things that the Hong Kong Exchange is doing, and also Bank of China being one of the leading banks in the world, doing and contributing to make the world a better place?
Thank you, Anthony. And that's a very important point, because we all know that this is, one of the great challenges of our times. And we have been not only, thinking a lot about this, but doing, many things in terms of making sure that we increase the transparency in the market, which is something very important, because whenever you talk about sustainability, it's important to understand what each of the players in the market are doing to try to improve sustainability, the environment. So from our side, as a regulator, we've been making sure that we set the right standards, rules, to make sure that we have transparency. But then at the same time, as an operator, what we want to do is that we use the market mechanisms to make sure that the proper value of sustainability can be taken into account, whether it's in the issuance of green bonds, and there's been a tremendous increase in the issuances of green bonds through the market, or more recently, we launched Core Climate, which is a marketplace where companies can trade voluntary carbon credits. And that has proven very successful in its first few months of operations. And essentially what we want to do is make sure that the participants in our markets have the tools to really find a way to get to that carbon neutral position over time, to facilitate that carbon transition. So lots of things that are in the works, lots of things that we're doing, and a very important topic for the future.
Okay, Liu Hangzhang, can you share your view on how we can improve the world through the efforts of Bank of China to make the world more sustainable?
Now the emerging markets and developing economies account for almost 2/3 of global greenhouse gas emissions. And the investment necessary to reduce emissions and control climate change will be immense, from $1 trillion to $6 trillion as predicted by different experts. But no matter what the figure is, public finance alone can't foot the bill. Mobilizing private capital is indispensable to the success of green and low carbon transition in the emerging markets. So on one hand, development banks and other international organizations are expected to take the lead. They could provide financial and technical support or help to build domestic bond markets in these countries with a view to channel more private investment to green transition. Green projects financed or endorsed by such institutions often promise higher expected returns, often represent images of responsibility, and tend to be more appealing to investors, especially when they carry guarantees against potential losses in green funding vehicles and securities. On the other hand, the private sector does not just provide funding, provide capital. It's also the main driver of innovations that are vital to the green transition. Many private firms themselves have their own green technologies and expertise. Their participation in the multilateral projects or the country's green capacity building forms part of and will attract more private capital. Governments in these countries should roll out more incentives and provide the essential infrastructure for the private sector to keep investing in green technologies. Thank you.
Thank you very much. Thank you for the contribution. Why don't I ask the audience also to participate? And basically, we would like you to vote and basically ask the question, within Asia, which of the following areas do you expect to see more regional collaboration? So, if I believe you all have the scan the QR code and then submit your response. And it's in the area of economic, policy, infrastructure, environment, which we briefly touched on, technology, food safety, and energy. Okay. I believe you all have submitted the answer, so why don't we see the result? Well, the first one obviously is economic, and then followed by technology, environment, infrastructure, and then policy, and lastly, food safety, policy, and then lastly, energy. So these are the areas that the audience have expressed their views. If I may ask the speakers if they can respond to that, whether you agree with it, and what are the things that we should be doing about it, particularly what are the things that your institution should be doing. Maybe firstly, if I can ask Nevin. Nevin, would you like to comment on the polling result? I mean, how should Huatai work with the other participants in the region on the various areas that has been indicated, particularly in the area of the economy.
Anthony, I think this question, you know, it's a challenge for me, I think, you know.
Mm-hmm.
I think, Nicholas, maybe you have a better answer than me. You are in a better position than me to answer this question, I think. Anthony's question is always challenging.
Yes, Nicholas.
Yeah, I'm glad that economic is up there because that's our purpose. To connect, to promote, and progress our markets and the communities they support. So it's precisely what our purpose is, to make sure that we're connecting markets, and the world needs a lot more connections. So I do believe that we're going to create a lot of value, and we've been doing a lot in terms of like changing the rules of our market to make sure that we can attract more international players to actually participate in our markets. And one that is a significant one that I'd like to comment about is the fact that international companies that list in Hong Kong will make sure that investors from the mainland can access their shares actually through Stock Connect, Southbound Stock Connect. That is something new that it's in the process of being implemented that is very, very significant, that will allow increased cooperation between countries and facilitate the flow of capital. So I think it's very, very important. I'd love to see a lot more sharing around technology. One item that it's not there in addition to technology is healthcare. As we all know, healthcare is becoming increasingly important. Hong Kong is today the second largest fundraising hub in the world in healthcare. And I think that is an area for increased collaboration amongst the region, but also between China and the US, China and the world. It creates an incredible opportunity. So, and without a doubt, just like touching briefly, sustainability will, no matter what, need the collaboration of all countries from around the world to resolve the problem. So this is one that everyone's interest is aligned. There's very little opposition, and the countries will work together.
Yeah, thank you, Nicholas. Well, actually, one of the things, the top ranking area that we should cooperate on is obviously the economics, and it is closely related to building of infrastructure. And so in this area, how can your institutions help in improving the infrastructure, both hard and soft, in the region? Maybe Jackie?
Yeah, thank you. Thank you, Anthony. Yeah, I really see that the top three areas being voted is economic, infrastructure, and also I forgot the third one. And the climate change. Yes, I just want to add one quick thing about the environment, climate change first to start with. AI Group is the first multinational insurance company that we divest completely from coal and coal directly related investment. And we direct the investment into healthcare, infrastructure, green bonds. In fact, Anthony's question to AI is a great one because AI collects insurance premium from all our Asia market, and we invest in the long-term projects. Infrastructure, obviously, is one of the key investment for AIA in Asia. And I want to emphasize that really within Asia, there should be a lot more cooperation in the economic side. As I just mentioned, the Asian economies or the Asian market, they are in different stage of development. Some of the Asian market really need big investment in infrastructure, and certain market has a big supply of the technique and the resources and the know-how. And for example, in the case of Hong Kong, I also want to emphasize that Hong Kong is really a bright spot in Asia because we have talent, both local talent and international talent for excellent business management, finance management, which are in great need in many of the Asian markets when they really want to go into better development of their infrastructure and their economy. And furthermore, I believe everyone also know that mainland China is a big market. Yes, that is great. So in many of the Asian markets, we have a lot of resources and supplies, and there is a big market in Asia, which is mainland China. Of course, not just mainland China. Other markets in Asia also has different level, different stage of demand for goods and services. So I really see that, the great cooperation on those areas like economic infrastructure and climate change are really indispensable for all of us in Asia.
Yeah, thank you, Jackie. Actually, Levin said that I may have better answer. I will not say that I will have better answer. But on the other hand, my experience has been whenever we improve the flows of the elements of the economy, and there are at least 5, people flow, capital flow, information flow, trade flow, which is merchandise trade, and services flow, it will benefit the trading partners. So I really would love to see that the RCEP would have more countries joining, and that all the member countries would treat each other as equal and drop all the barriers. But in addition to RCEP, we are also seeing a lot of the kind of multilateral initiatives, such as the Belt and Road, and closer to home obviously is the GBA, the Guangdong, Hong Kong, Macau kind of GBA initiative. All of these flows, all of these initiatives that can increase the flows of the 5 things that we talk about, as well as the free flow of information and technology, will somehow improve the economic well-being as well as all the other things. Now, obviously, we have to prevent the problems such as uneven distribution of wealth, such as overly emphasizing profits and return and somehow hurting the environment. But if we can see more collaboration amongst the countries in Asia and obviously with the rest of the world, I'm sure the world would be a better one. Now, I mean, we are all very optimistic about Asia and the Asian multilateralism. But there clearly is an elephant in the room. We are sitting in Hong Kong. We all say that Hong Kong has all kinds of opportunities. But on the other hand, we are also seeing the rise of Singapore. Some would even say that Singapore is eating our lunch because we see a lot of companies, a lot of people moving to Singapore. How would we see Hong Kong's position with Singapore? What are our competitive advantage? Or are we really competing? Or is it not quite a zero-sum game? If I may ask firstly Sam to comment on it, because he had led one of the largest banks in Singapore, but he's a Hong Kong citizen. So Sam, can you comment on this kind of interesting question?
Sure. This is also a sensitive question, a controversial question. But on the other hand, I think I am partially qualified to do this because I was from Hong Kong. I spent the last 15 years in Singapore, and prior to that, I spent 15 years in Hong Kong. So it's balanced. My view, I would like to share with you, is that I don't think it is a direct competition in all areas. The pie, for example, wealth management, is a well-talked about area that the two places are competing for wealth management businesses. But the wealth management pie is very big, and the wealth management pie is not limited. As it grows, everybody can kind of have a growth in wealth management business in either Hong Kong or Singapore, and in Hong Kong as well as Singapore, because the pie is growing. Other businesses, I think Hong Kong has got a natural advantage with respect to the China business, whereas Singapore has got a natural advantage with respect to the ASEAN business. Both are very big businesses, and both businesses are also growing. So in that sense, I think the competition between Singapore and Hong Kong has been overemphasized. Having said that, however, I do recognize that the competition for human talent is indeed quite strong between the two places. Because human talent is a limited supply, at least in the short run, is a limited supply. And indeed, it is true that Hong Kong and Singapore could be competing in the same human talent pool. To resolve this is actually not to say using administrative measures to stop the poaching of talents. To resolve this is to again expand the pool of human talents. So in Singapore, I was the vice chairman for the Institute of Banking and Finance. The chairman is actually the managing director for MAS. So I'm the vice chairman for that. And I'm also the chairman of the Institute of Banking and Finance Standards Committee. We spend a lot of time in trying to develop new talents. We also try to identify those industries which are a bit of coming down, may not be expanding that fast, and try to retrain those people into the areas which are growing, such as in asset management, asset diversification type, in order to allow these people to have a new career path. So I think the answer to that is we should develop our talent as much as possible from adjacent areas, as well as even from areas which are not related to the areas that you are seeing shortfall of human resources. We can do that. Our human resources over here in Hong Kong are very versatile, very flexible. They lack the type of skills and exposure training. Give them a chance. Allow them to be exposed to those areas, and we do not have to always compete for the same pool of resources, and we do not have to create that connotation that perhaps Singapore and Hong Kong is in direct head-on competition with each other in all areas. As a matter of fact, only in this particular area that I think is more correct. The other areas, the pie is big enough for both of us to exist and to prosper.
Well, thank you, Sam. I think you really hit it on the head of the nail, and that is really enlarge the pie rather than just competing with each other. But Jackie, I mean, AIA has operation in both places as well as others. What is your view?
Yeah, thank you, Anthony. First of all, I have to declare interest. I'm a Hong Konger, and I'm 100% behind Hong Kong. I really believe that, Hong Kong continue will thrive. But I will also, first of all, also share my experience on COVID, comparing between Hong Kong and Singapore. Last year in July, I got COVID in London, but then my trip was over. I can't come back to Hong Kong to work, but I can go to Singapore and work out of Singapore, and therefore at that time, because Singapore has opened up a lot faster than the rest of the economy, it does have a advantage in terms of this way, in terms of I did experience that. Yeah, I can still operate out of Singapore, and then after I fully recover, I can come back to Hong Kong. But now Hong Kong has reopened, so we are come back. So Hong Kong will rebound. I want to say that in a way, maybe Hong Kong, Singapore, are two financial hubs in Asia. And to me, I still strongly believe that Hong Kong is still one of the international financial hubs. But truly, the pie is big enough, and I would say that Hong Kong and Singapore probably serve or complement each other. Singapore is a great location for Southeast Asia. I really see that it is really not easy, right, to replicate that. Singapore serve, right, all those wealth management business in Southeast Asia, and they have a big Indian community, and don't underestimate the rise of India. But Hong Kong is a gateway of mainland China to the world, and also a gateway of the international community to China. We are in such a great position. So I do see that Hong Kong and Singapore, will grow and thrive because we really complement each other, and the pie at the end of the day is big enough, and it is fast growing, right? The rise middle income class in Asia, etc., etc.
Yeah, thank you, Jackie. Well, Nicholas, you are not born in Hong Kong, so maybe you can have I would not say impartial, but a view that may differ from ours.
I'm not from Hong Kong. I'm from Argentina, so I love soccer. I like football, and it's I'm very happy. But I agree with Sam actually. What Sam said is, I think it's very, very true. There's so much that Hong Kong and Singapore can complement each other on, and one has a sphere of influence more like around Southeast Asia. Clearly, Hong Kong has a very unique positioning, like Jackie said, of being the most international city of China and the most Chinese city outside of the mainland. That's a very unique positioning. So if we can marry some of these things and start like interacting more and more, I think that it's a win-win for everyone. IPOs. So many areas that can complement, and as I said, the key point is making sure that we find those areas of complementation and try to develop them as much as possible.
Yeah, thank you. Our panel focused on Asia-led multilateralism, but clearly multilateralism should expand outside of Asia. And early on we mentioned the Belt and Road Initiative. And recently I've seen a lot of investors actually going to the Middle East because they figure out that with the wealth that they are accumulating with a high oil price, and maybe some of those countries would like to invest more in our part of the world. And clearly this is also an area that Asia can work closer with them on various areas. So if I may ask the speakers to comment on how can we collaborate better with the countries along the Belt and Road, particularly to benefit Asia and hopefully including Hong Kong as well. If I may ask Liu Hangjiao to comment on what are the opportunities of closer collaboration with countries on the Belt and Road Initiative. And then later maybe Levin, you can comment on it as well.
Thank you. When we talk about the recent economic development and opening up of China's economy, we often quote the 20th CPC National Congress. It's one of the most important recent events in China. As President Xi reiterated at the Congress, China is committed to its fundamental national policy of opening up to the outside world and pursues a mutually beneficial strategy of opening up. This statement actually means new opportunities for China and its neighbors and all the countries with mutual interest. For Asian economies, I think there are several ways to capture these opportunities. opportunities. One of them is the Belt and Road Initiative. So my first suggestion is to tap further into the Chinese mainland market. China's mega market is attractive enough, and its free trade zone programs gave foreign businesses even easier access to its market in more sectors. Its exhibition events such as CIIE, Hana Expo, and Canton Fair provide great platforms for trading goods and services at various levels. I still remember how the market was excited by President Xi's suggestion of increasing imports from neighboring countries in his remarks at the opening ceremony of one of the CIIE events. So we welcome companies in Asia Pacific to board the train of China's development forward. Secondly, to take China's industrial strength as an engine to fuel their growth. Thanks to its full-fledged industrial system, China would provide a large number of high-quality, low-cost means of production and intermediate goods. In recent years, innovation in China is gathering pace too, especially in green and digital technologies. These can be conducive to the Asian economies in the industrial upgrading and sustainable development. Just now in the live voting session, I didn't join you. If I had, I would have chosen text number 3 and 4, infrastructure and environment. The reason is that in these two areas, especially under the Belt and Road Initiative, in the infrastructure field, we have both China and the neighboring countries. We have existing and more projects to work together. And finally, to have active participation in the Belt and Road Initiative. So all the neighboring fully agree with Mr. Liang that infrastructure and under the Belt and Road Initiative is one of the most important fields that China and the neighboring countries can work together. Thank you.
Well, thank you, President Liu. Levin?
I fully agree with President Liu. All the opportunities coming from China-led initiatives, say, Belt and Road. I want to echo that with some further explanations on the first M. Just now I mentioned earlier, that is made in Asia. There is a well-known term, the flying geese economic theory, created by the Japanese economist Kanami Akasasu. Simply put, it refers to continuous shift of supply chains from developed countries to developing ones. During the last round of supply chain restructuring, starting from the late 1980s, the labor-intensive industry was first transferred from Japan to the four Asian tigers, and then to the mainland China as it opened up. At the moment, we are witnessing a new round of supply chain shift because of China's industrial upgrade. It's transferring labor-intensive production capacity to other neighboring Asian economies. But that's not all. With the help of these multilateral initiatives, China is also exporting raw materials, technology, capital, and expertise to help them build up production bases. This will lead to more manufacturing powerhouses and industrial clusters across Asia, building deeper supply chain interdependency. We will eventually see more high-speed growth miracles in Asian countries. That is the emerging story of Made in Asia.
Thank you, Levin. We have used more than the allotted time. We thank you for your patience and forbearance. Thank you again.
And a big thank you to Mr. Leung and all our panelists. And yes, please come to the front of the stage for a group photo. Thank you again to everybody. Just for our audience, in case you've missed out on any sessions or you'd like to revisit some of the panel discussions, you can go to the AFF virtual event platform, and we do have video on demand, so you can play back some of those panel discussions that you might not have been able to attend. If you would like to hear the next panel, which is happening in the Pulse Hall 5E, it's the Global Spectrum session on what is good philanthropy. It's co-organized by the Hong Kong Trade Development Council and the Center for Asian Philanthropy and Society. It's just started, so it goes on till 6:15. So if you'd like to go over there to the Pulse Hall 5E, you can catch that discussion. And just moving on to what's happening tomorrow, our exclusive keynote luncheon tomorrow will feature a dialogue with Ms. Helen Clark, who's the former Prime Minister of New Zealand. And that will be moderated by Mr. Raymond Chow, PwC's Asia Pacific and China Chairman. Ms. Clark will be talking about giving some insights on gender equality and inclusion. Tomorrow we'll also have a series of thematic workshops on issues such as energy transition, the family office landscape, philanthropy, data intelligence, virtual asset development, fintech, CBDC, and more, as well as a series of global spectrums surveying the outlook for the carbon market, ESG standards, food security, Web3, and the metaverse. And don't forget, the FinTech Showcase carries on, leading financial institutions and technology companies presenting their latest innovations and cutting-edge solutions in AI, blockchain, cybersecurity, insurtech, payment technology, regtech, and wealth tech. And that is complemented by the Venture Salon, which is open tomorrow at 9 o'clock, both online and offline. And investors there can take a look at over 40 high potential startup projects, entrepreneurs, face-to-face with startups and entrepreneurs. And there'll also be a series of fireside chats covering the Greater Bay Area opportunities, NFT and digital collectibles, the venture capital outlook, regtech innovation, and more. Co-organized by the Financial Services and the Treasury Bureau, the Hong Kong Trade Development Council, and Invest Hong Kong, with the support of Cyberport and the Hong Kong Science and Technology Parks, the fintech HK Startup Salon, under the umbrella of the InnoVenture Salon, is on at Hall 5C. It features next generation business ideas from over 50 fintech startups from Australia, mainland China, Hong Kong, Israel, Italy, Korea, Saudi Arabia, Singapore, and Thailand. And don't forget the Global Investment Zone in Hall 5C, which showcases investment projects covering a wide range of sectors, and the AFF Deal Flow Matchmaking Sessions, which is taking place throughout these 2 days. That takes place at Hall 5E, and this year's Deal Flow features over 300 investors and 500 projects. They're covering a variety of sectors, including digital tech, environment and clean energy, financial technology, healthcare technology, as well as infrastructure and real estate. And the virtual part of the matchmaking session will continue to provide investors and project owners opportunities to meet until the 17th of January. So this is the end of our official program at Inspiration Hall. I hope you've had a wonderful day. Look forward to seeing you all again tomorrow at 9 a.m. for the thematic workshop on incubating entrepreneurs for longevity. Thank you very much, everyone, for joining us today.